Welcome to the art of reading price action. So I'm very excited to release this video. It's a compilation of every single art of reading price action that I've ever done. None of this has ever touched the internet publicly. This is going to be the single most beneficial and influential video I ever post on this YouTube channel. So if you're going to watch any of them, watch this one. You don't need any prerequisites. By the end of this, you will understand how to read price action better than anybody, light years better than anybody, and I guarantee that. This is every single thing I know about reading price action. It's split into 6 different segments, 6 different videos, all in one. Every last thing I know about reading price action without levels, raw charts, just understanding the market to the deepest level. Take notes, grab some fucking popcorn, go into the description, join the Discord if you want, join live trading if you want. Without further ado, let's get into this. The best video that I will ever post on this channel begins now. Oh, and by the way, some of the sections, the first one and the last one, are going to be one-sided audio. Sorry about that. I'm not going to re-record them. There's going to be timestamps in the video player that you could jump around if you want to. And yeah, get ready for this because this is genuinely the most beneficial and useful video that I will ever post on this channel. Don't take it for granted.
All right, so today I wanted to talk about just reading price action. I think a skill that a lot of people undervalue is the ability to just read what the candlesticks are saying. Okay, forget the levels, forget the technical analysis, forget everything on the chart, and just read candle by candle what the market is doing. And I think this is a reason why my ability to understand where the market is going to go is generally a little bit higher than a lot of people's. It's because I spent a lot of time getting really good at the ability to just read price action. And if you've watched me trade live or anything like that, you know that I spend a lot of time just reading price action. For me, it's not so much about the actual levels, and of course the levels and things of that nature are very important, but if you can't read price action at those levels, then the levels don't matter at all. Okay, you really need to be able to read price action, read where it's going, read if the market is strong, if it's weak, if it looks like it's going to be aggressive, if it looks like it's going to be slow, if it looks like it's going to be choppy, and everything in between. And you have to be able to really read price action. So today we're going to be doing something a little bit different, and that's I'm going to take you into multiple different days of price action, and I'm not going to mark any lines. I'm not going to talk about an external bias. I'm not going to talk about anything. I'm going to go candle by candle through the entire day on one time frame, and I'm just going to read the candlesticks. I'm going to read the chart, and obviously I've traded this market for a long time. I'm going to remember some of these days, but again, I do this live every single day. Obviously, this is hindsight, but I can't, there's no way I can sit here and be like, oh, well, watch me do this real time. I do that, right? I trade live in front of 20, 30 people every single day, every single morning that the market's awake. So the day that we're going to start out with is a day that I wasn't able to trade, though, which was May 16th. So you know, you're going to have to just believe. Obviously, I see price action now. I know what happened. But I haven't looked kind of intently into this day at all. So we're going to start at 5:30 because 5:30 is when the market opens in futures. And we're going to go to the end of the day. And we're going to do this for a couple of different days. I'm going to go as far back as I can so I don't remember it. I'm going to look as far into the future as I can, etc. And again, I'm not going to be marking any high time frame levels. I'm not going to be looking for reasons to have a particular bias. I'm not even going to be particularly looking to the left all that much. I'm going to be reading price action and walking through my thoughts as I do it, because this is a very crucial part of understanding what the market is doing. Being able to read price action is very important. So with that being said, we are going to get started. All right, so right off the rip, off of market open here, the very first thing that I would notice here, let's say all my tools were stripped away and I had to only watch the market through the lens of one time frame, and I wasn't allowed to switch, I wasn't allowed to look at high time frame levels, and I had to come to some sort of conclusion about price, what was price going to do. So the very first thing that I noticed is that we wicked up, right, and we failed to push above this high. Okay, we failed to push above this high. So what that makes me think right off the rip is that if we're not pushing into new highs, we're probably going to be pushing into new lows. So right off the rip here, I'd think, even though there's no way for me to have a very solidified bias yet, this is the first minute, my first instinct would be, hey, we're probably going to try to take this low. Why? Because we're not taking this high. And very basic part of the market, very basic part of reading price is if you're rejecting off of a high, you're probably going to go make a new low. Simple as that. Right. And then off to the left a little bit, I also noticed that this fair value gap is here. And for us to go up on this day, we would need to potentially turn that inversion. Right now, I'd be looking at this wick getting closed and this inversion fair value gap potentially being turned inversion. But right off the rip, we're not making new high. We're probably going to run into a new low. Right. And so we do. Okay. And then the market pulls up. One thing that catches my eye immediately with this pull up is that we closed at or above this first candle's low. So although this doesn't mean a terrible amount, what it tells me is that there's some hesitancy in actually plummeting. Because if we were actually going to plummet, this candle's body would close much deeper, and we would at least have an ability to create a fair value gap here, which right now, even if the market opened and traded down, we would have no ability to create a fair value gap or really anything here. So to me, this doesn't look like an extremely aggressive run down at all. And there we go. So we start to push up now. We reject a little bit off the top. That's fine. We try to push. We reject hard. So again, same idea here. At this point, we broke lower. Now we're rejecting off the high. So now we're going to go try for this low. We push down into the low, and we actually reject. So now at this point, the market is likely, because the market is very likely to go into this kind of choppy price action for at least a couple candles, right? In between this range. Why? Because you failed down. You attempted the high, and then you attempted the low, and both sides failed. So because both sides failed, you're probably going to go in this choppy price action trying to break out of either side for a couple of candles. And until you do, personally, anything inside of this range becomes lower probability if you don't have any high time frame levels, right? Like if you had a high time frame level down here that's holding again and again, maybe you understand that liquidity swept or something, your bias is up, maybe you could form some sort of bias. But if you're just reading price action at this point, I don't think you can. Okay, and I would be watching to see what the market wants to do here. And so you try the low again, and so you try the high again, and you try the low again, and then you finally break. So it did get choppy, right? We traded to the high, then we traded to the low, then we tried the high, then we tried the low, then we tried the high, then we tried the low, and went back and forth and back and forth and back and forth, and we finally broke up. So now that we're finally breaking up out of this range, look to the left a little bit, and we did close this fair value gap also. I also notice this was at 4:30, so this would have been a red folder news wick. And something that I know, and I said that we wouldn't be using things to the left and things of this nature, but this would have caught my eye if I was just staring at this chart and I noticed that we're breaking out. This wick catches my eye immediately because this is a wick that's created off of red folder news. And a lot of times, not always, but about 65% of the times, these big wicks that get created from red folder news get ran the same day, about 60% of the time. So that's something just on this very small amount of chart that I'm looking at. We're likely, if this starts to move up in any sort of way, it's probably likely to go visit. It's probably likely to go visit this high eventually, right? Obviously, I don't know, but at this point, if the market wanted to push back down into this wick, that could be potentially an idea to go long, right? If the market wanted to push back down in this wick, because we've already turned this inversion, we could go test the levels inside of this wick now, and things of that nature if we wanted to. However, I wouldn't really want to see us gaining this candle as an order block. Like I wouldn't want to see you push down and gain this as an order block. So we could push down into this wick, but I wouldn't want price to trade underneath this. Otherwise, you're more likely to go run these lows. So price comes back down into this wick, and now you have a fair value gap here. So that's great. I would expect price to probably trade into this fair value gap. We do trade into this fair value gap now. And the reason is because that also gives you access to the levels inside of this wick. And now, because this completely filled in this fair value gap, I would expect this low to not be taken, and I would actually expect the midpoint of this wick to hold. If we trade down to it, I don't know if we will trade down into it, but if we do, I would expect the midpoint of this wick to hold if we get down there. It seems like so far we're just pushing up a little bit, and at this point, we run into this higher fair value gap over to the left, and we roll off, and we actually do end up coming down into the midpoint of this wick, which is totally valid. I wouldn't want to see this low get ran. And at this point, this fair value gap is holding. Right, I wouldn't want to see this low get ran, because if this low is getting ran, then you're likely going to run down into here. So at this very moment, I still like the idea of this being relatively bullish. Push down a little bit deeper into that fair value gap. Everything's looking good so far. And we should see a relatively quick expansion sometime soon. You don't want to fuck around in this range too much, but you should see a relatively quick expansion at this point, I think. You do, and you close just above this candle's high. So if it wants to, I suppose you could potentially tap back down to this wick. One thing that I will say though, in this particular case, is I don't want to see price falling too much lower than this level. And I've also just realized that it's been 10 minutes and we're only through 15 minutes of price action. So this video might be a little bit longer than I thought. This video might end up being a little bit longer than I thought. I might need to speed things up a little bit. Okay, so I wouldn't want to see you expanding back down below this. Why? Because currently this is the order block in the range, right? So if we expand too far below this and then hold underneath, that's indicative of this holding as a bearish thing. I would actually want to see price open and not be able to get back down beneath this level, because that's kind of showcasing and telling me that price action is failing to get underneath this, and it's holding a bearish, quote unquote bearish thing, a bearish order block in a bullish way. And if that's happening, then that will continue my bullish bias that I've gained from breaking out of this level and holding this fair value gap and not breaking this low. Everything in this case is so far working in a bullish way. So we wick down a little bit. So far everything's good. We're not below this candle. I'm fine with it. Try to push again. We're starting to break above this high. Okay. And we didn't exit this. As of now, everything is good. We did close above this high, which is good to see. Very good to see. Fall down a little bit. All good. Everything's still good. And notice how we're holding the levels inside of this quote unquote bullish order block or this bearish order block. We're holding them in a bullish way. We're not expanding lower than them, exactly like I mentioned we shouldn't see. Price is looking very good. We gained this down close candle also, which is also an order block. We traded back down into that. Also this bearish one. And so far, everything is looking fairly nice. And we push up again. We fall down a little bit. Hit an immediate rebalance. So if the market is to continue being extremely bullish, we should see this immediate rebalance get respected. And if that's the case, we should see potentially a fairly quick run, right? And we should see very aggressive signatures and price action if this is actually going to be respected. Okay, so price pushes down a little bit. Price pushes down a little bit. And we actually get this huge wick lower down into this order block. So this, to me, isn't that bullish looking anymore. And the reason for this is because this immediate rebalance starts to get disrespected a little bit. So now my attention would be, now this could kind of go both ways at this point. You're either going to run this high and absolutely blow through this, or you're going to try to push this high and you're going to fail to expand, and then you're going to roll over a little bit. And this immediate rebalancing failing like this is a big deal to me, because if this was going to be very aggressive, you would have been very aggressive off the immediate rebalance. Now this rejection looks disgusting, and I think this probably at least gets you above this high. But my question at this point would be, how aggressively do we start trading into this high, and can we seriously expand out of it, Or are we going to start to try to roll over because you're starting to see signs that this move is degrading off of this immediate rebounds failing? So you push up, you did close above it, you try to expand again, you're kind of wicking above the side, it's not really working, you fall down, you're going for it again, it's wicking out, rejecting. This doesn't look too sweet, to be honest. This to me almost looks like it used this range as a liquidity sweep. So at this point, this kind of looks like it's starting to roll over. We left lows down here. The immediate rebalance is failing. The midpoint of this wick got closed. This candle is still the bearish order block in the range that we did gain. You're failing to seriously expand out of this move. This kind of looks like it wants to potentially roll over a little bit sometime soon. I don't know if it will, but price pushes down. We create equal lows. It's totally fine. And then we get another wick down. We try to push up. I wonder if this is roughly the mean threshold of this candle. It is, right? We trade up into the mean threshold of this order block roughly and still fall. This fair value gap is still respected. This looks pretty gross, to be honest. This looks like you want to roll over big time. You could become a little bit convinced here, but at this point you have to be fairly convinced that these lows are very likely to get ran, especially now. Like the last step to this would be like closing underneath this wick, which you do right there. So at this point, very confident in this, and maybe you even get these lows, maybe not. We'll see. Time will tell. So price pushes down, and we do sweep all the way underneath these lows. We don't quite get these lows yet. We'll see if the market develops in a way that makes it kind of clear or not clear if we are going to get those lows. Price pushes down a little bit. At this point, I'll be watching this fair value gap. If this fair value gap turns inversion, then maybe we can just leave these lows in the market and keep these for later in the day. What time is it? It's 6:08. So maybe if these stay normal like this, and this turns inversion, and then we could start to show some sort of bullish signs into this high, maybe those lows could be left for like a 7:30 type of retracement type of deal. But I wouldn't necessarily. And one thing also here is like I noticed that this fair value gap turn inversion, it got completely disrespected as an inversion fair value gap. That to me is kind of bullish. Price pushes up. And at this point, we have liquidity sweep. This getting completely disrespected as an inversion fair value gap. Now, if this could turn inversion, you kind of have everything you would like to see for almost a long, really. And now the low end, look at this. The low end of this fair value gap is holding. This is kind of telling you that this is probably going to turn inversion. I wouldn't like to see price below this low anymore. In fact, if you were trying to be aggressive, maybe like the midpoint of this wick could be a long. Right, so we trade down, we don't take out the low, and we go and we turn this candle inversion. Perfect. Exactly what you want to see. The price pushes down a little bit. Just trying to hold, get really messy. You're in this kind of like choppy area. You're not expanding out of this high just yet. And out of this wick either, but you are holding this as inversion. You came down roughly to the midpoint of this inversion fair value gap. This is where price held. It looks like you're probably going to make a really aggressive attempt into this high. And for the best reasons that I could explain, is just everything's starting to look bullish once again, right? So we fell down and we were very bearish for a moment based off of everything that happened up here. But at this point, we had the liquidity sweep. Yes, we created equal lows. A lot of people might think, well, why shouldn't we come to these equal lows? Because read price action, right? We have this inversion fair value gap that got inversion. This got completely disrespected here, and it showcased the willingness to actually hold this up. Now you're also holding inside of this, which is the midpoint of this fair value gap, and we're holding at the high point of the range. This looks like it wants to potentially run into that high. So I would assume that we're going to run into that high next. Now we're holding the high end of this inversion fair value gap. Everything looks good. And we get that aggressive run into the high. So now the question becomes, are we going to get the aggressive run all the way up into this high or not? So the first thing that I'd be watching right off the rip here is, remember this wick that I spoke about here? I would be watching to see if price would like to potentially come back down into this wick and hold this fair value gap. So we did tap back down into that wick here. We closed above it. We traded back down into the wick. We have this fair value gap that's slightly lower here. We'll see if we make a higher fair value gap, then maybe we won't have to come down to this lower one, but I don't know if we'll make a higher one. We just seen an immediate rebalance here. We've seen an immediate rebalance here, so if this gets disrespected, we could assume that we're probably going to fall down to this fair value gap. This does get disrespected. Oh, no, it actually doesn't. It holds. This is fine so far. It's starting, I would say it's still fine. The one thing that's kind of throwing me off is you're starting to close under these volume imbalances, but you still have this immediate rebalance that should be working. Now at this point though, it looks kind of sketchy, right? I'm not saying it looks sketchy overall, but it looks kind of sketchy in terms of this doesn't look like it wants to be as aggressive anymore. Maybe you finally get that pullback down into here before you run up, because at this point, just like what happened earlier down here, the market's starting to look a little bit weaker. Okay, you pushed above these highs, barely expanded. Pushed above these highs, rejected hard. To me, this looks like a little bit of a liquidity sweep, and if this fails, you would see price down into this fair value gap. Now, I wouldn't want to see price below this wick, because this is the thing that broke price out. So if we get below this level, then very likely you're going to go around these lows. But if this just wants to be a pullback, something like this could probably be reasonable, if I had to guess. Push price. Notice again, right? We push up into this high. We're unable to expand this high. This still looks bearish to me. We try again at that high. It's still failing to close above that high. And we're starting to really degrade this immediate rebalance. I wouldn't be surprised if in the next 1 or 2 candles, this makes its way down into this wick and into this fair value gap. We push into that wick again, and we push into that fair value gap. Now this is back to looking okay. That was just a retracement. Now we're looking at this order block that got created inside of this range. You could come back down into like the mean threshold of this order block. You have the high, you have the mean threshold, you have the open. Anywhere back down in this order block would make sense at this point. And I would still be watching this high. Okay, I'd still be watching to see if this high wants to get closed over. We push, and we fail to break above that high again. So as long as we're failing to break above this high, there's always a chance that we could run lower. But at this point, because this held, I would expect this high to get ran, and I would expect that this rejection is just showcasing that you could trade down into the mean threshold of this order block. So we'll see if that's the case. Still rejecting off that high means you could probably push slightly lower. You do. I'm assuming that's probably deep into the mean threshold. Yeah, that 18,714 level. Let's see if this actually holds. So there you go. The mean threshold held. Then you tried to take out this candle's wick, and it failed. It failed to get taken out, which is, in my opinion, a relatively bullish sign. So at this point, I believe if you take out this candle's high, you'll likely run here, and then there's really nothing stopping you from running into this high, assuming there's no high time frame levels or anything or whatever. But just based on price action, that's kind of looks like what might happen. So at this point, I'd be extremely confident that this high is going to go ran, especially because you just held the mean threshold and you tried to run for the low again and you failed to run into the low, so you're probably going to go run into the high. Okay. And by the way, you could use these same techniques on a daily chart to find a daily bias. Okay, this is basically just intraday bias that I'm explaining, and how I'm walking through it is exactly how I'm finding bias on a day-to-day basis, right? This price pushes up. We fail that high again. But just like earlier with this order block that I was mentioning, if price can stay, is this the highest close candle? It's the highest close biggest body candle. So if price could stay relatively above this 717, I think we're all good. If we start expanding below this level, then potentially we could run into the lows. But at this very moment, I think it's all good. Push up again, and we close above that high. Okay. At this very moment, I don't see any reason why this shouldn't just expand fairly aggressively. Unless we get like some sort of indication that this is just a liquidity sweep. And there we go. We get a immediate rebalance too. So this is just icing on the cake. This is just icing on the cake. We trade down. Notice how we don't take out that immediate rebalance. Push down again. Don't take out the immediate rebalance. We had this volume imbalance. It's the first thing that got created. It got respected. We should push right up into this high if I had to guess. There we go. We trade down into the fair value gap here. And this is not turning inversion, and we create this big wick off the top. So now the question is this going to be a liquidity sweep, or are we going to expand? And I think the way that you have to think about this is, well, how does a move start to fail? Well, if this starts to turn inversion, then maybe we can make our way back down below this immediate rebalance. If this order block starts to be gained, then maybe we can start to make our way back down below this immediate rebalance. But if this just continues holding, right now we're pushing into new highs, so there's no reason to expect that we're not going to just keep pushing into new highs. At this moment, there's probably only, like the only thing you could reasonably expect is that we're just going to keep running higher, because the market just has kept running higher. So we could pretty much only expect that we're going to keep running higher. And does this fair value gap hold again? Yes. And it holds again. Okay. Now the question is, can we gain the order block in this range? We can gain the order block in this range. So at this point, if you're going to reject this high, I wouldn't want to see you below this. And if anything, like a return back into this order block's high might be in play. So you have this return back down to that order block's high. You didn't break beneath this candle's low. This fair value gap still holding. You're just going to expand higher here, very likely. And I wouldn't want to see this wick be disrespected anymore. In fact, I'd almost wonder if you could visit like one of the levels in this wick now, since you just closed over it. So you do. You trade down. It's also this old high. And this is also something to be said. If this was really a liquidity sweep, you would have no problem getting back underneath this. And at this point, you're having a problem getting back underneath it. This just looks super bullish. This just looks super bullish. And we start to run. Speed it up a little bit. Start to run. Start to run. We have a bit of a retracement. We do gain this order block, but the fair value gap's still down here if we want to run into it. See, we push up just fine. So still, I would have to be bullish at this point, because you pushed up and what's it called? Yeah, you gain this order block, but you were just able to hold. Like, you saw this fair value gap down here that could help you. You're still expanding through these highs, right? I would want to see more aggressive expansion if this is going to continue being aggressive, though. So this starts to get kind of sketchy. This starts to get kind of sketchy in the sense that, look at the difference here. Like, when you expand through this high, it runs. When you expand through this high, it runs. When you expand through this high, it rejects. And then, is this going to hold? There's the volume imbalance. It could still hold and it could still run at this point. But I would really, really, really want to see like an aggressive continuation above this high. I wouldn't want to see you just kind of fall off a little bit. It kind of looks like the market's starting to potentially slow down slightly. Price pushes. Push above this high. We closed above that high. Looking good. This doesn't look that great though anymore. And I'll tell you why. Really, the big thing that I'd be watching in this very moment is, does this turn inversion or not, this fair value gap? And what I'm looking at here is this. So look at the difference between this bid of price and then this final bid of price here. You push, you fail to really expand, and now you're gaining the order block, and now you have room to create a fair value gap here, and now you're threatening to break down this whole move. Kind of looks sketchy. You push down and you close beneath this wick. So you close beneath this wick and you turn this inversion. At this point, I think it's safe to assume that you're probably going to go run into like these lows. Either these lows down here or potentially this could be the start to an all-out reversal. I don't think you could say that yet. I would want to see this try to make an attempt to go run into the new high again and then get rejected before I would say that this is probably an all-out reversal. So I don't think you could say it's an all-out reversal yet. But it's definitely getting to a point where the market starts to look a little bit weaker, and you could start to think about liquidity being swept. And this is just the nearest pool liquidity. So even if the market's going to continue going higher, I would like to see a push down at least into these lows at this point. And then if we make an attempt at the high, and that rolls over, then maybe you could start to think about these lows. So we do go run for these lows. That's fine. We do go run for these lows. We push up. We're not getting into this fair value gap yet. I don't think there's any reason to think that we're going to reverse just yet. Go back down into those lows. Try to make a small push up. It's still failing. For me to think that this is going to go reverse and try to go for that high again, I would need us to see at least this first fair value gap turn inversion. Really all you did was you traded up this tiny little order block or whatever you want to call it. Is just killing price down. So nothing here just yet to be interested in. Price pushes. You turn this inversion and you gain this order block. So maybe at this point, if price wanted to, it could potentially make an attempt to go fill in this fair value gap and see if it could continue on its trend to break the high. So things like the mean threshold of this order block might be in play now. We'll see. Trades back down. It's holding. Everything's looking good. It's not able to get back beneath these lows again. You're probably going to go make an attempt for this high now. Now, are you going to break above that high? That becomes the big question here. That becomes the very big question. You had an immediate rebalance. I'd expect this to be an aggressive attempt towards this high. You do get a bit of an aggressive run up into trying to break into this high, but you're not turning this inversion, and basically you just ran into the order block. So now you gain this as a bearish order block. You're rejecting off of this. If you fail this immediate rebalance, you're probably going to go try to take these lows because this is like the bigger leg up that you're failing. If you're failing to break into this high, that could potentially push you down all the way down into these lows. So I think not getting beneath this immediate rebalance is kind of a big deal right now. Push down. You're not closing that immediate rebalance yet. I think it's still okay. And you close beneath that immediate rebalance. So the market's kind of in a shaky place right now. Still hold those lows. It's kind of tough. I would say at this point, I would say at this point, and this usually happens if you're nearing a top, you might go, or if you're going to continue, you're going to start going into this somewhat choppy price action here. Like you attempted this high and now you attempted this low. You failed the high and you failed the low. So the fact that you did fail this bigger high though makes me think that this is probably going to roll over lower. But it can kind of go either which way. Now you would have to watch internal price action here and see what kind of sets up and looks good. As for where your next target would be though, you would be looking underneath this low, just because it's the next pool liquidity lower, and that higher one has already been taken. Price pushes, Currently, everything looks fine. This doesn't look too fine, though. You try to expand above this high. You try to expand above this high. It pushes, it pushes, it pushes, it pushes. I have a feeling this thing's probably going to fall off a cliff here. Pushes. It's not getting above this high. It's holding this fair value gap. And we're coming off the rejection of getting above here. And we failed that immediate rebalance. Yikes. There's really nothing beneath us. I mean, these lows, you could trade into that, but really because we're rejecting out of this leg up, I would be expecting targets inside of this leg up. So we might run down into 709.50 now. Yeah, you get this nasty run lower. I don't know how aggressive this move will be, but you did just close underneath here. I'd be highly expecting these lows and probably even expecting this 09.50 at this point. We'll see what happens. What a candle. What a candle. Jesus. Okay. So this rejects pretty damn hard here. We didn't run into those lower lows though. So that's something to kind of be mindful of at this point, is that we did not run into the lower, kind of the lower lows inside of that range. All we've done at this point is we closed this low. We held off this, and now we've just created equal lows in the market sitting here. So we create a fair value gap here. So long as this fair value gap's holding us down, we're probably going to keep going. This rejection looks nasty, but push up, push up. It's just holding the first thing available. So maybe we go try for that low again. It's kind of failing. It's kind of failing. It's kind of failing to, I mean, if you're failing to take this low at this point, maybe this just wants to get used as like a secondary sweep of liquidity, which is something you see a lot if the market's actually rolling down, where you had this liquidity sweep. Maybe this wants to be used as a secondary sweep now because, again, just chart basics, chart reading basics. If you're not breaking the low, you might go break into the high. Maybe you do. You do push up into there. Now the question is, how high is this going to roll off in? Push. Pushes higher. At this point, you're back in here, looking at this fair value gap. I want to see some sort of signature that this might be ready to fall. Now looking for some sort of signature, this might get ready to fall. Price is just holding above this high right now though, so you can't really assume that it's going to fall just yet. You push through this. That's super sketchy. You get an immediate rebalance here. Get an immediate rebalance here. Off of this. So based on that immediate rebalance, you're at the very least going to go take this low. And you might end up taking the actual bigger lows, potentially. Price falls. I would expect at least the internal low to go get ran very aggressively, though. Which does happen. You reject off of that. Now the question is, off of this rejection, are you going to go break this high? And if you're not going to break this high, you're going to go fall into these lows. Push up. Again, at the top of the move. Very weak types of behavior here, where you're trying to break above this high. You're trying to expand above this high, but you're not really expanding above this high. You're just trading into the order block. So this might end up falling once again, because I still think that these lows are going to get ran, because again, I still think we're in this bigger picture thing where this is the high and you want to start targeting things going down. You do fall off. You didn't close this fair value gap though, so I don't think. Oh, okay. Well, the very next candle just runs into the low. I will say we've talked about a lot. I give you my ideas of what might happen. I think so far we've basically covered how I'm reading price action candle by candle and how I'm looking at it. As like a piece of, I guess, homework, I want you to take the remainder of this day and just go candle by candle through it. And think about the day. I'm not going to go through the remainder of this day. This video is already 40 minutes. Hopefully you got something out of this. Obviously, I use high time frame levels. Obviously, I use everything like this, but just the ability to read, like, your bias should still be 100% correct, even if you have no levels on your screen. You should be able to come to a conclusion about a bias and direction of the market, even if you have no levels on your screen. Okay? If you can't, you need to get better at reading price action. I'll see you guys next. Alrighty, today we're going to be doing a part 2 of the reading price action series. I'm going to be dropping a couple videos back to back over this weekend. Before I start here, I want to say I'm officially back home. I was gone for a whole week due to a last minute flight that I had to go out to, but I'm officially back home. Things are going to return back to normal. Member Plus recaps are going to start coming out daily. These Patreon videos are going to start coming out again, YouTube Shorts, whatever. Everything's going to come back to normal. So apologies for the inactivity last week. Nothing I could have done about it. This week, we're going to go harder. So, we're going to be doing a part 2 of the reading price action series. If you haven't seen this series, go on to Patreon. The last one was called, I think, The Art of Reading Price Action, part 1. And it's basically reading a chart without any levels. So you might think, well, isn't the technical analysis and all the levels and the lines the most important part? And I agree, that is a important part, but I'd say that's about maybe half of the understanding of price action. A lot of people neglect actually reading price action, actually understanding price action. And that's what I want to really drill home with this series. It's being able to read price action without levels, being able to get a feel for what the market's doing, being able to kind of bring it back to the basics and just read a chart, okay? Just read a chart. So with that being said, I want to find an asset that I haven't really looked too deep into because I don't want a lot of prejudice here. Let's do platinum. I've really never really looked too deep into it, and I just want to make this fairly random as possible. So I'm going to just make this really small. We'll roll this back as far as we want to. Let me go to really old price action because I don't want to get anything recent that I might have seen already. I want to make this as kind of good as possible here. Let's go here. This is fine. It would have been nice to talk about this whole run as well. But okay, yeah, this is fine. Let's go ahead and go here. And again, like I said, what we're going to do with this series is, as I mentioned, it's just about kind of reading price action without, reading price action without levels, without lines and things on your chart, and kind of just watching price action and getting in tune with it that way. So we're going to do quite a couple candles here. I'm on a daily chart on this one. Last video in the series, I was on a 1 minute chart. Here I'm on a daily chart. And I'm not going to switch time frame. I'm not going to mark levels. I'm not going to do anything like that. We're just going to be reading price action, okay? This is the art of reading price action. This is what this series is for. So when I look at this chart immediately, the first thing that I notice right off the rip is that we pushed up a lot, we sold off, and then now we've entered kind of a downtrend, right? It was very clear, and I don't know, on a higher time frame, we might still be in an uptrend or whatever, but it was very clear we were going up, right? Remember, bring it back to the basics. We kind of ranged, and then we started moving down. And that's kind of how the market generally works, is if you're in a trend, once you get to the top of that trend, you enter some sort of range, and then you either break up or that turns into a reversal. So now that we're on a downtrend, we have to start thinking about just this continuing to move down, right? And right off the rip, when I see price action like this, we've been going down very aggressively. We try to just push this low, right, in this candle, and we pushed up a little bit. What we pushed up into was just this fair value gap. And I won't be marking lines, but if I see very basic, simple things like this, I will talk about them. And we're coming off of a run of this high. So, by the way, when I say I won't be marking lines, I'll mark very small things just to kind of get my point across, right? We just ran this high and we failed to expand up. So typically if a market's actually expanding, we're going to really expand and instead of just rolling over. But what we did was we just poked above this high and we rolled over, and then we tried for this low. We held the low, but then we traded right into this fair value gap, which leads me to believe that this is probably going to just fall over once again and probably just continue into new lows. which we do at this point. Here, I don't think there's much to talk about. You get a little bit of a bigger wick on this candle in relation to the size of the body, so I wouldn't be so surprised if you get a push up into this fair value gap at least. It seems like you do. And then, again, I would just assume that the market's going to keep rolling over because we're moving down, so I'm just going to keep assuming that we're going to keep moving down. So this becomes a little bit different here. Now, at this point, we have gained this order block, right? So in theory, we would have had, what is this? Am I recording still? I better be recording. This is going to be a long video, and I don't want to accidentally not record it. Okay, I'm recording. So we just ran through this low, and we are in a downtrend overall, and we're still just selling off. And that's totally fine. But at this point, we've gained this order block by wicking above this candle's high, which kind of leads me to believe that we might want to go run this high as a like a liquidity sweep. So you might get a short-term, very short-term kind of push backwards on this, especially if you start to see things like the mean threshold of this like not get closed under, for example, right? So you push price. I like to see price open. It tries for the low, and especially because this just tried for the low and failed to take out that low, this makes me even more confident that probably this high is going to go get ran. And once this high gets ran, if it does, of course, I don't know if it will or not, but if it does, I would expect that to get used as liquidity for this to still roll over. And I would expect it to just be potentially filling in this volume imbalance, for example. And the reason for that is because, again, overall, you have to be bearish here, I think. And the reason you have to be bearish is just look at recent price action. We're just falling and falling and falling. If the market's going down, you have to assume it's going to keep going down, right? So everything from the mix of this gaining the order block to this trying to push for the low and failing kind of leads me to believe that you're probably going to go run this high as liquidity at this point, which you do. You do run. Now the question becomes, really becomes, are you going to get back beneath this high? Okay. Are you going to get back beneath this high? Because this could turn into a bigger retracement instead of just a simple liquidity sweep, if it wanted to. But the first step to that would be actually expanding above this high, which we can't assume. We can't assume that it's going to go expand above this high because we don't have any context, right? Maybe if on like a super high time frame, this was a big uptrend, which it kind of seems like it was, and this is coming down to like a really strong level or something, then maybe you could sit here and assume like, yes, this is going to roll over. But if you're just reading price action and you don't have any high time info, you don't have anything like that, the only thing you could assume is this is going to keep rolling over. So you push down again. So this is interesting at this point because you pushed back into this order block. Here. But at the same time, you also just traded right back up into this volume imbalance, and you failed to close back above the old high that you just swept. So at this point, it's kind of tough. You kind of have to make an assumption of either this order block is going to hold and you're going to push into a new high, or you're going to continue the overarching trend, which is moving downwards. So with nothing to base our idea off of, the only real edge we have in this case is saying that price will probably continue its overarching trend. So my assumption is now that this high just got ran, the only thing that kind of makes sense is this. Now, if we are to push into a new high here, then we could start to think about levels way up here. But at this very moment, yes, you held the order block, but you're also just sweeping this. So I think the next one or two candles are going to be pretty important for price action. But my assumption would have to be that you're just going to fall into a new low. So price opens, we get an inside bar, which is just it didn't take out the prior candle's high or low. So kind of nothing much changes in this candle, and then we push down through. So at this point, I'd be very confident these lows getting ran and it just continued expansion lower to follow along with the higher trend. Okay, so price falls, we're rejecting off the old lows, which is kind of good to see, right? If this was going to be a liquidity sweep, then we could get much deeper into the range, like up into this fair value gap. But so long as we're just rejecting off the old lows here and not getting substantially back above them, that's fairly good to see. If we do get above these, then maybe we go visit like this order block. But if we stay beneath these lows, we should just continue to roll over, right? Price trades down. We get a little bit of a push here on this candle, as it is an up candle. So I wouldn't be surprised if you go into like a little range bound type of market, or you try to go back up into this high and push it again. At this point, yeah. So you tried to push for the low and it got rejected hard. That should let you in on that this is going to go at this point, try for this again. We'll see if it does. It does. It does indeed try for that again, and then it fails the high. So you're either going to get one of two things here. Either you're going to try this low again and then go into a really range-bound market, or you're just going to keep falling lower. That's kind of one of the only two things you're going to get here. Price pushes down. Price pushes down. You're rejecting off this fair value gap. The rejection off this fair value gap leads me to believe, if it, depending on what the next candle does, really. Let me see the next candle. So the fact that you didn't, like, you just went back into this fair value gap. I don't know if you could see what I'm seeing here, but all you did was you traded right back into that. This kind of leads me to believe that, and I think that these highs, by the way, will probably be used later in the market. But the fact that you just completely failed to get back into this, into these lows, like boom, 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 and you just failed, it makes me think that could continue lower. Now the fact that you're holding this fair value gap just leads me to believe you're going to continue running lower, which you do. A couple more candles here. Was that an immediate rebalance? Let me see. I don't know if it was or not. It was. It was an immediate rebalance. So at this point, if the market wants to kind of create a pull up, you would have to fail this immediate rebalance. Now, these wicks on these candles kind of don't look that weak. So you have kind of two conflicting ideas here in the sense of these candles don't look weak. And the reason they don't look weak is because they're not big bodied. So like if I look at it like a strong downtrend or a strong uptrend, it doesn't matter. Notice on a strong uptrend, most candles close like right at their high. I think it's some sort of statistic that like in a strong trend, like 80% of candles, up candles, close at their high. In a strong downtrend, like 80% of down candles close at their low. And look at all these candles. Like when you're really moving down in a strong way, almost all candles close like right at their low. Same when you're moving up. So when I start to see this start to happen, this is why it's giving me a little bit of conflicting information, because externally we're on a downtrend. Internally we just immediately rebalance, but we're starting to get these like, how to say, like big wicks. Boom, boom, boom. Like the market is not really closing near the lows of the candles anymore, which leads me to believe that potentially you could start to roll up. But I wouldn't actually say that until you fail this immediate rebalance. So for me, until you get like a big body candle lower or you actually fail this immediate rebalance, to me there's no like super valid, super easy to determine directional bias. So you push up, you try to fail this immediate rebalance. I wouldn't consider it failed yet. It pushes lower. Now you push up. At this point, you did fail the immediate rebalance. So at this point, I need to see this wick get broken. You could treat this wick as you filled in this fair value gap with this wick. So at this point, if this wick gets closed over, you could start to potentially consider having a little bit of a deeper retracement in this move. However, that doesn't necessarily mean you can start to consider like an entire recapturing of this move. Maybe it could be the start of that, but it would be way too early to say. So at this point, you have this kind of range of price where either you're going to continue moving down off this here, or you're going to end up expanding through this wick and closing above this wick. Again, the reason I'm using this wick instead of that fair value gap is because this wick completely encapsulated that fair value gap. So you try to push for the high. It doesn't close. So now it's probably going to go try to push for the low. the low of the range. Which it does, and it kind of fails. So at this point, you just have a range of price, and I don't think there's any real validity in a directional bias until you break out of this range of price. So you've tried for the highs and you've tried for the lows. Until you close like a decisive candle outside the bottom, or you close above the hot this wick, you're probably just gonna go in like a I don't know, some type of range in here, and then you at the end of the day you're either gonna break out up or higher or lower. So like if this was a 1 minute chart, this would represent an area of price action that I would not trade in, unless, for example, like if I had, for example, like a super high time frame level here, and it's part of like an external trend, then maybe I could start to assume that potentially we could break out of this. But what I want you to notice is how different this piece of price action is to this stop and this stop and this stop. In these stops, we stopped and then immediately ran the low. We stopped and immediately ran the low. This is a very strong trending market, whereas here we've started to transition into more of a range-bound market where we created this low, we created this high, we tried to push the high, we failed. We tried to push the low, and we failed a couple times. So now it's kind of in this moment of indecision where it's either going to break higher or lower, but we can't be super convicted that the super strong trend is going to continue or anything like that. Let me drink a cup of water here. I'm going to pause I'm not going to pause the recording. Let me just drink a cup of water. Damn, this has already been 16 minutes. What date is this? This is 2009. We'll go till 2010. We'll go till 2010. So let's push this. So when you're in a range-bound market, you just like the only trading opportunities in a range-bound market is to play from one side of the range to the other. So either you stay out and you say, hey, there's a chance that we break above, or you try to play for a rollover. So like internally right here, you're just sweeping these highs. So if this is going to roll over without breaking the high of this range, it's going to do it like in the next couple candles. Which you get right there. Really, there's not much sense in trying to anticipate what's going to happen inside of a range-bound market. Like I said, I wouldn't be considering anything until we actually break out of this section of price action. And we do. We actually do get out of this section of price action. So at this point, you have to start considering what's going to happen here, because this is now very important. When you get into, if you're in an exterior trend and then you start to get into a very range-bound part of the move, that's a shitty line. That's also a shitty line. That's also a shitty line. There we go. And then you start to get in a really range-bound part of the move, like here. So you have a very established trend, and then you start kind of bottoming out almost. The question that that has to go through your head is this just going to be a liquidity sweep to continue the overarching trend, or is this going to try to reverse the trend by actually having an expansion? And the way that you see that oftentimes is on this first push, the first pullback is important. If the first pullback brings you back into the range, then likely that's just going to be a liquidity sweep that brings you down into new lows. However, if the first pullback starts to hold and not bring you into the back into the range, then you could get price action that actually starts a new trend, and who knows, it could be the beginning of an actual total reversal of the down move that happened. So the first pullback that happens is generally really important when you're breaking out of a range that's coming from a strong trend in the market. Okay, so price is moving up. We're going to get that pullback eventually. This candle looks pretty weak, to be honest. Why does this candle look weak? This candle looks weak because it just has a giant wick on top. So the question is, are you going to expand through that? You try, you fail. So at this point, the assumption would have to be that this is being used as a liquidity sweep and you're going to roll over. The reason that would have to be the assumption is because being part of like a much bigger like defined directional trend at this point. Again, if you don't get like if this pullback doesn't bring you back deep into this range, then that starts to like look like a much stronger type of move that might actually turn into something. So we just created this low. That's fine. And at this point, okay, at this point you don't have much. You have the same thing that happened back here, right? You had a high in the market, you had a low in the market, you tried to push the low, you tried to push the high. So now your new kind of range of price is, and I'll just mark a box with this, you're going to go into kind of a range-bound market inside of here, and it's going to decide what you want to do. And this is a super important part, because now at this point, breaking lower into this, like you could wick down into here, right? But you don't want to like get below here and not be able to get back outside of the range. That's really the main thing. So this new little range-bound parts of price here is going to be fairly important for the move. Either you're going to break out of it and it's going to turn into a total reversal that completely gets back in line with the bigger trend, or you're going to break outside of top of it. And if you do that, that's basically rejecting this as just a liquidity sweep, which can in turn start an actual strong move that can move up. So you don't get that confirmation really in this first bout of the move. You get it on the second pullback, because getting back underneath these highs and not being able to get above them would be kind of crucial for price. So we'll see what happens. You try to test into the highs one more time. It's kind of failing. You start to get out of it. And then here you get retests, and you break into a new high. So at this point in time, especially if you can now close this prior high here. Yeah. At this point in time, I would be confident enough to say that this market has now transitioned from this really aggressive downtrend to either a retracement that's going to take you as high as it's going to take you, or an all-out reversal. And that I don't know, because I don't know how far the market's going to go, right? But I hope this process, like really understand like how different this and this is from this, right? It's just like we said before, like when the market is reversing a trend, it gets into like a range bound type of market on top. And then this second part right here is really the defining part. Just like this second part and this second part are the same second part, just like this range and this range are the same range, okay? And that's really how the market rolls over almost every single time in almost all cases. And again, if this was 1 minute price action, I'll be looking at it the exact same, okay? I'll be looking at it the exact same. So price pushes, pushes again, we fall down, we're holding this initial fair value gap. That's good to see. It's good to see. We should make a new high. We do make a new high. Price pushes. It honestly doesn't look the strongest right now, but I think it's probably fine, especially because at the same time as this is going on, we're rolling over these highs. But I mean, this looks just fine so far. Price pushes lower. Cool. So at this point, you're either holding this fair value gap and you're going to make a really aggressive run, or you're going to have a kind of extended, drawn-out pullback. And that pullback would likely take you down into this fair value gap. So we'll see. At this point, you try to push up. You failed to gain this order block. Considering you failed to gain this order block, you're now, like if I was trading this day by day, my bias would now be to go into this fair value gap. And the reason for that is because, well, it would be hard to get a bias, but you've tried to hold this fair value gap like 3 times. You completely disrespected this wick, and now you tried to push up and you're just rejecting getting above like the mean threshold of this order block. Right, the mean threshold is here. You're rejecting it. You're basically immediate rebalancing. You're not gaining it. So a rollover down into here could potentially make some sense. And there you get it literally on the first candle down into there. Amazing. So now, the question is, does this keep running or not? The question is, does this keep running or not? And I think the answer just lies with this fair value gap. If you break through below this fair value gap, then it probably won't keep running. If you hold this fair value gap, it probably will. But because I think now we're in a kind of more established uptrend, my assumption would just be that this uptrend is going to continue. So my assumption would just be that whatever's going on here is probably just going to be accumulation of pushing to new highs. That would have to be my assumption, right? And we basically just got a liquidity sweep underneath these lows. So we tapped into the fair value gap once. We swept again. How could have you maybe anticipated that sweep? Well, you just did it on the other side too, right? You tried to push out of this range, you just swept, and then you pushed down into here. So either you're trading within this range, so you could almost mark something like this, where like these two levels are the range that you're looking at. That's now kind of the deciding factor. Either you're trading in this range, just trying to play back and forth, or you're just waiting. Like if this was a 1 minute chart, I might just be waiting. Or I'd be slightly biased long. Okay. Like for example, like if this test filled a little bit deeper, I might be interested on a retest of this fair value gap to take it long. And the reason for that is just simply because now that this whole thing has taken place down here and we actually broke out and actually started this established uptrend, well, I think we're on a more of an established uptrend, right? So we do trade back down into that fair value gap. As I mentioned, I wouldn't mind, for example, I probably wouldn't take a long there because this wick isn't really long enough, but if this would have traded like a little bit deeper down in here, it might look pretty good, potentially. We tap back down into it again, and then we break up. Cool. Now that we've broken up, there's one of two ways that this could go. Either you're going to leave this open, and if you leave this open, like if the next candle just runs immediately above this and it leaves that fair value gap open, then you could get a really aggressive start to a run. A lot of times at the start of really aggressive runs, you leave a fair value gap at the bottom of the chart open. Or you could trade down into it, and if you trade down into the fair value gap, then you could get a little bit of a range bound price before continuing higher. Or at least that's what I'd potentially assume. So you trade into that fair value gap. So I'm not expecting anything like ridiculously aggressive at this point. You just get this little range bound price action. Remember, this is days of candles. This is like 12 days so far. This could be a 1 minute chart for all I care. Right? You create this new order block in the range right here. So now basically either this order block holds, or you go run these lows. And I don't think there's much other that you could do. Either this order block holds or you go run those lows. So you trade into the order block. You actually do get into the high, right? The high part of the order block. You trade into the order block. If this is holding, you should just get a bit of an expansion. Which you start to get price pulls back. At this point, that's immediate rebalance, pushes up. I could only assume that it's probably going to continue higher. I could be wrong, but I could only assume that it's going to continue higher because that's what you've been doing. It doesn't. Okay, I think this is the first time I've been fairly wrong this little reading price session here. So at this point, now that this has failed, like this immediate rebalance failed, now I'd probably be looking for some sort of liquidity to go get ran, because this order block has already been traded into. So now you kind of have an option between either you're probably going to go run for these lows, or you're going to go run for these lows. Either way, I don't think it would like ruin the integrity of the uptrend, but I think you're very likely to go run for one of these lows at this point. Just because this immediate rebalance failed and you gain this order block, like when you gain this order block, you trade it back up into it, you failed everything. This is a pretty damning candle. The only way that this recovers at this point, I believe, is if you get like a really nasty candle like on the next candle, which you don't. You actually leave a fair value gap here. You actually leave a fair value gap here, and honestly, this fair value gap, I would assume that this fair value gap gets traded into and rolled down. Now, the reason I'm assuming that this fair value gap doesn't get left open is because we're not in a downtrend. Okay, I think this is an important concept here. Because we're not in a downtrend, I'm not assuming that this gets left open. Notice right when the uptrend started, you left this fair value gap open. If this fair value gap gets left open and it doesn't come back up, that could onset like quite a big run lower. However, I think that we're just going to go target these as liquidity and then continue higher potentially. So I would assume that you do actually trade into this fair value gap and then fall down. And the reason for that many times is because then that gets rid, well, it doesn't get rid of the fair value gap, but like you've already used the fair value gap, so it makes the actual recovery much easier. Versus if you leave one open, you could come down there later, and then all of a sudden the recovery becomes a lot harder because you have something in the way. If that makes sense. Hopefully it makes sense. So you are using this fair value gap here. You push back outside of it, and then you run for those lows. So at this point, the question in my brain would be, what's going to happen here? Are we going to, and we don't just get into those lows, by the way, we also trade down into this order block. So the real question is this order block going to hold, or are we going to go run for these lows? We try again, we push into the order block again. At this point, if you break above this high, then I don't think this is going to hold, and I think that you're probably just going to go run into a new high and continue the uptrend. I need to see you close above that high, though, which you do. You do close above that high. And then you go on, do you now turn this fair value gap inversion? You do turn this fair value gap inversion. So now on a retest back down, we could come fill in this inversion fair value gap if we want, but I wouldn't, at this point, I don't think I'd expect you to go run these lows. Maybe you could go get a wick underneath these lows. I don't think it's necessarily required. And the reason I don't think it's required is because you're coming off of a liquidity sweep already, right? You've already taken liquidity here. So you don't necessarily need to come back down and take it again before we roll up. We can, but that's only going to happen like if this inversion fair value gap fails. So let's play this through a little bit. We rejected off whatever this is up here, and price came down. So I wouldn't want to see you like actually closing beneath this, what's it called? Inversion fair value gap. I wouldn't want to see you actually closing beneath this. And now that this wick is here, I wouldn't want to see you closing underneath this wick. So this is now kind of the barometer in price. If you close beneath this wick, you're very likely to go run these lows. If you hold this wick and then push up once again, you're likely to just run into these highs and then continue into the bigger high in the market here. So you push down, you close outside of the fair value gap. You don't close the wick though, not yet. And you push up. So, and now you're back outside of the inversion gap. At this point, I'd be pretty confident that this is the low. You're not going to go take these lows. And at this point, I'd be fairly confident on a run into these highs sometime very soon. And you actually get that right away. So that's good to see. And I hope that made sense, this whole like understanding inside of here. And that's not just based off of nothing. That's also based on the idea that we're in this strong trend. It's based on the idea that liquidity was already taken. It's based on the idea that this fair value gap actually got traded into instead of not getting traded into. It's based off the idea that this order block held. It's based off the idea that this turned inversion. Like there's a lot that goes into that thought process. That's not just market holds random level and it goes up. There's actually reading price action that goes into that thought process, right? So hopefully that makes sense. So at this point, now the question becomes, are we just rolling over these highs? Are we just rolling over these highs to continue the bigger, broader trend. And that becomes kind of a question that we have to answer here. But we just take it one day at a time, right? So at this point, we had an immediate rebalance to go higher, and we failed that immediate rebalance. So my concern here would be that because we're failing this immediate rebalance and we just gained this order block, my concern would be that this 486.6, which is here, 486.6, my concern would be that the mean threshold of this order block might potentially try to hold price down. So my next question here would be, well, we just failed this immediate rebalance here. We just failed the immediate rebalance. We just gained the order block off that. This all of a sudden doesn't look like extremely bullish. I have to assume it's going to keep being bullish, but it doesn't look extremely bullish yet. So we push into this. If we could expand in the next candle, we're just going to run higher. We try to push. At this point, we are trying to immediately rebalance to the upside. So at this point, I think this is very critical. You need to see if this is going to push into a new high right away off this new immediate rebalance, or if it's going to fail this immediate rebalance. If you fail this immediate rebalance, you could see yourself down into the low end of this range, potentially even sweeping like the lows down here, right? So we do fail that immediate rebalance in a big way. So I would be pretty confident that the mean threshold here is holding, and for the next couple of days, I'd be biased bearish, I think. And I would be biased bearish to at least into this inversion fair value gap. And then, time will tell, but maybe we'll get into these lows. Maybe we'll get into these lows. Maybe we'll get all the way down into here. Maybe we'll get all the way down into here. I don't know, right? That's not something I could know. But at this point, I'd be biased to at least running back down into this inversion fair value gap. I think that would be very reasonable. And you get down into it. Let's see what happens. So you're either going to be trying to create a new move here, or you're going to roll over lower down into like these lows. Now the question becomes, you tried to push for this low again on this test. Now you're trying to push for this high. If you break above this high, then we could recontinue the trend. If you fail this high, then we're just going to get into a range-bound market until it decides to break, which we fail that high. So at this point, like if this was a 1-minute chart, I would be waiting for one side of this little range to break out of. And we break lower. Okay, cool. So we broke lower. So at this point, my eyes going into like the next couple of days would be on, decide like, are we going to get into this low? Are we going to get into this low? Are we going to get into this low? Where are we trying to get into? Where are we trying to go? Where are we trying to get into? Where are we trying to go? I hope this makes sense. Somebody get a glass of water. And by the way, this is on platinum. Let me just check this quote really quick. This is on platinum, but this could also be, this could be NASDAQ on a 1-minute chart. It doesn't matter really. So my eyes would be on these lows now because we failed this range to push higher. We kind of failed everything. So my eyes would be on, can we get into one of these lows and what's going to happen when we're under them? So we push into this low. I don't think you can make a lot of assumptions here at this point. I would love to know if this would have sold off first or traded up into this inversion gap first. But I think we have to see the next candle. Do we push lower? So we actually get beneath these lows also. So my default expectation would honestly just be, let's see if we could get into these lows down here. Time will tell. Price continues. this kind of starts to look like you might not go take these lows. So let me run you through what's going on in my head right now. So overall, I still believe overall, we might still be in a downtrend. Okay. But this is kind of a deciding point right now because this is kind of our first test really deep into a range. Either this whole thing's going to wick, hold, or expand. Okay. If it holds, then I could be fairly confident that we're going to get like a fairly bigger retracement, like up into the high part of this range up here. Right now in these candles, what's making me a little bit hesitant about potentially considering these lows is that, again, the same thing that I was talking about earlier. Look at the candles and look at the wicks, right? Like this closed near its low. That's great. This actually big wick up. This pushed underneath these new equal lows on a lower. I don't know if I could go to a 4 hour. I can't. Okay, well this just spoiled a couple candles, unfortunately. Okay, so now it's kind of pointless because we know that this actually rolls over. But let me just explain why I would have thought that anyways. Because now we've swept underneath these equal lows and we're just closing. We're not closing. We're not staying underneath these lows that we just swept. So it makes me believe that potentially you're going to see a bit of a push. And we do get that. And then we get that. And then we turn this inversion. So you could do one or two things now. You could either come all the way back down in the order block. I actually wouldn't want to see you back down in the order block. And the reason for that is because oftentimes you see, like, this is when the order block gets hit. And I'm sure, like, with this whole thing of price action here, I'm sure there's like a higher time frame order blocks resting right here. I think we can go one time frame up. Yeah, there is a higher time frame order block just sitting right here, right? And I said I wouldn't change time frames, but I think this is a useful tool here. Like, this is your higher time frame order block in the move, which is your weekly. And this just held again. Like, you don't need to come back down into the daily at this point off the thing, because if this is going to turn into like a new uptrend, generally these small retracements trade into fair value gaps or inversion fair value gaps. Okay, so really the main thing that I'd be looking at this point would be this inversion fair value gap and how price potentially wants to trade and fill this in if it wants to. You could even mark this down into like the volume imbalance, for example. You mark it all the way up here. If you marked it like this, you would argue that the fair value gap wasn't inversion yet, but we're just going to keep it simple. Okay, so, and you can trade down into here. You can trade down into here. I don't need to see you trade down into there, just like I don't need to see you trade down into the order block, but you can. But at this point, I'd be fairly confident that we're going to kind of restart the uptrend and actually push into new highs probably. So we hold the low end of the inversion gap. So now the question becomes, what's going to happen? We fall down, hold again, price pushes up, it gets, it creates this new order block in the range. Now I would argue that you could hold this one, because this is being created off of here. So there's two ways that this plays out now. Either you're going to go run for these lows right off the rip, or you're going to, you're just going to hold this order block and push. Which you held that order block, you pushed into a new high. At this point, the only thing that I could be is bullish. You still have the mean threshold of this order block over here that you have to get through. Which we could just take that off the screen. But my only assumption now would be like I have to be bullish. So you try to push, you start to roll over a little bit, and you turn this fair value gap inversion. Okay. So you've turned this fair value gap inversion at this point. This could now go one of two ways. Either you're going to go immediately and sweep these lows and then roll over, or you're just going to trade like back down into this order block and roll up. Okay, so at this point, I would have to assume that you have this new fair value gap here, which actually got closed over. So that's interesting. You actually closed over this, and what you pushed up into is the actual order block in the range. So you're kind of on this, like, in this kind of like range bound price where you have, you attempted the highs of this range, and now you attempted the lows of this range, and you can't get out either side. So you're really in this range, kind of range bound here, but with a slight hint at an uptrend. I would argue. And this even makes it better. So at this point, especially on this candle, now you've traded back into this order block, which also trades back like down into this fair value gap down here. You've held the higher time frame order block. You've started the bigger uptrend. You had this kind of initial accumulation for that. With this wick here being like this, I would have to assume now you're actually going to get this run into 519. You rolled over here, you created equal highs. Now this push down. I would say you don't need to go for these lows anymore. And the reason that I'd say that is because, well, you just already swept liquidity. So if this holds, like, I think basically the second that this breaks above this candle's high, I would argue that you're going to get all the way up into this high. But you broke it there, and it should just be a pretty straight shot at this point, which it was. Cool. So this is September 2009. I said we would go to September 2010, but this video has already been 46 minutes long. I'm starting to feel myself gradually degrade in my ability to read price action well. I hope this video helps somebody. We're going to do probably a couple more of these videos in this series. I think that this is a really good series. This reading price action series is important. Just being able to read price action on one time frame and understand kind of intricacies with trend and what happens when you're in range bound, what happens when you don't go take a high, when to expect lows to get ran, when to not expect them to get ran, just kind of the very basics of trend and the very basics of reading a chart. I think that's really important to understand. And I think it's unfortunately something that a lot of traders lack. Now, please don't feel bad on yourself if you go into the charts and you can't be as good as me at this right away. Okay. Don't compare yourself to me. I am pushing 20,000 hours watching charts. Okay. And if you don't have that kind of experience, you're not going to be as good as me at it. You don't need to be as good as me at it. It does come with practice. I wasn't always this good at this. And you can get it over time. But this is also this is intuition mixed with just chart reading ability, mixed with technical analysis ability, mixed with everything. So, and like I said, I've been doing this for like 20,000 hours. I would go onto this platinum chart from where we left off and do this like just continue through all the way to 2022 if you want to, or you'll pick a new chart. It doesn't have to be platinum if you don't want to do platinum. Go try to pick something that you haven't really looked at before. Okay. And then, go through candle by candle, try to learn how to read price. And if it doesn't do what you thought it was going to do, feel free to ask questions in the Discord. Feel free to, just train yourself on what actually happened, push through it, do whatever you have to do to figure it out. But your ability to read price action is important. So hopefully this helped people, and I'll see you guys. All right, today we're going to be doing another art of reading price action video. So I've been asking people in the Discord. By the way, if you're not in Discord, join it. If you're on this Patreon and you're not on the Discord, you should be in the Discord. There's a video suggestion channel in there, and I've been asking people for suggestions of what videos to do. And quite a lot of people have said that they want to see more of the art of reading price action series. And I agree with that. I think reading price action, along with the technical analysis, reading price action is probably just as important as the technical analysis. If you can't read the chart without any levels, then you can't read the chart with levels, because levels aren't magic things. Price comes to these levels, and you need to read price action when you're at those levels anyways. So actually being able to read a naked chart is super important. I've already picked out an asset class today. There's not a lot of asset classes that I haven't dug really deep into on a low time frame or anything like that. So today we're going to be doing treasury bonds, which is ZB1. Make sure B adjust is turned on if you're following along. I'm going to drop down to an hourly chart here. And just like always, and like the normal, the way that I do this is I spread this out very large like this. I'm going to go back in time to some random as I can really spot in the middle of nowhere here. And with that being said, all I'm going to do is I'm going to drop a replay tool on this. And then when I press auto, it's going to be in a spot that is more or less random, and it's in the middle of nowhere, and it's on an asset class that I haven't dug into largely on a low time frame. And if you've watched the other art of reading price action videos, you know it's kind of how this series is formatted and what we're going to do here. So without further ado, let's get into it. All right, so the first thing that I want to do here is just make sure, move OBS over, is just make sure kind of where are we on a bigger scope of things here. We just had a large downtrend. We started to roll over a bit near the lows. We pushed these lows, we pushed lower, we made a new high, and we kind of started like a newer uptrend, it seems like, in the market. We've already kind of found more or less a bottom here. We spiked up, and now we're kind of in this range where it's kind of deciding, hey, are we going to use, for example, like these highs that we just ran over? Is this going to be a liquidity sweep to drop down potentially into a little bit lower lows, which low-key probably is what's going to happen next, if I had to guess. Are we going to drop down into some of these interior lows? Are we going to just expand off this? What's going on? And really, internal price action, what it's showing me off the rip here is that we pushed above this high, and I'm going to be using a slightly more technical analysis than normal here, but just super basic stuff. I'm not going to be marking a ton of levels or anything like that. I want this to be as naked as possible. So the thing that's interesting me mostly right now is that we ran through this high as a liquidity sweep. I don't know if there's a high time frame level up here. I'm sure there is. I'm pretty sure there's probably a high time frame level up here if I had to guess. Obviously I don't know since I'm not looking at a lot of technical analysis here. We fell off. We immediately pushed into this first fair value gap, and we just sold off extremely aggressively. We turned this inversion, and we also gained the order block here. Now, the next thing that's really interesting when I look at this portion of price action here is that we're not getting back above the highs that we swept. And this is an important concept for liquidity sweeps. So when you have a sweep of liquidity like you do here, right, you had these highs, they get ran in this run. When you have a liquidity sweep like this, there is a 55 to 60% chance that you're going to get a retest of those highs or lows that you sweep. So for example, if price was to sweep these lows and came back above it, there's about a 55 to 60% chance that you get this retest. And this retest is important because if liquidity was actually taken above the highs here, we don't necessarily want to see price getting back up there, because if price's main function is to be taking liquidity on both sides of the marketplace, well, it already did, right? It already did take liquidity up here. And this is also something for the future, but like if this is true and this already did take liquidity up in this range, the fact that we're rejecting off the highs that brought us there gives me a pretty strong bias towards believing that we should reach into potentially these lows. Because it's just the opposing liquidity and potentially these lows. So if I had to guess, that would be more or less my guess for the next move here. We'll see if that's what plays out. I think there's sound logic to it, and we'll see. Price gaps down here, creates a fair value gap. I would assume this fair value gap here probably gets held, along with this inversion fair value gap probably gets held. We may even trade right up into this gap. A lot of times when you see okay, I just fucked it up here. Let me try to remedy this. I don't know exactly where we were in time. I know we were decently far out. I don't want to get spoiled though. I messed up trading view. Where were we? Surely it's like, I believe we were like in the 11th somewhere in here. Is this before or after? It's probably after. Apologies for this. I messed up a little bit. We traded up to that level. Oh, there's the red box. Okay, we'll just let it play out to there. Like I said, apologies for this. I accidentally pressed space bar and it fucked my thing up. Okay, we're back to where we were. Okay, let's hopefully that doesn't happen again. Okay, so like I said, we just ran these highs. We're failing to get back above the highs that we ran. We could push down into here. Oftentimes, you're going to tap right up into these gaps that get created in the market. I don't know if you do or not. At this point, you already ran these lows. So now it's going to make kind of a choice. If or if not, it wants to run even lower, which would be to get into these lows. Which again is just kind of the next choice that it has to make here. Price pushes up into that gap. It's in a bit of an awkward situation now because you didn't really harshly sweep these lows, so you kind of do still have these as equal. If this falls down, I think you could reasonably target either which one. I'd still be bearish in this exact moment for now. So price pushed up. We did reject off them decently. Okay, and now this gets a little bit interesting. The reason this gets a little bit interesting is because you just swept underneath these lows and you're not expanding lower. Like if this was the new low, again, we had these, we moved it over to here because liquidity was swept underneath these lows and now pierced again. Now, what's interesting about this is that we pushed lower, we opened above those old levels, we came down to hold above them. This to me, I believe I'd still have to be bearish at this very moment, but I'd be like cautious. Bearish but cautious, very cautious, because you're kind of at a moment here where these don't need to be ran right away. They just don't. They really don't need to be ran right away. And really, you could be potentially attempting to get back to the high end of this range, to be quite honest, because if these are just sweeping and you're staying above these lows, just like basic price action wise, if you're not making a new expansion lower, you're going to try to expand higher. You created very clear equal highs and equal highs here. There's a solid chance that you have a pretty aggressive move up at this moment. I think I would want to see a little bit more. I could be wrong for wanting to see a little bit more. I do think I would want to see a little bit more though, and we'll see where it takes us. Okay, so, and you actually do. You don't expand lower. You get this really nasty up candle going straight up here. So at this point, what I'd be mostly looking at is if we could stay within the range of this particular fair value gap. Okay. So if this is going to just hold us down, what you'll see is price action potentially just like expanding back underneath it, right? So if this is going to hold us down, you'll see price action get back underneath it. It's going to hold us up, and we're going to continue this run lower. If the case comes along where you start to showcase the, I guess, tendencies of turning this inversion, you could really quickly run for these highs because this is kind of the next spot to go for. And really the big question for me would be less about these highs, and without any understanding, without any knowing of high time frame levels, my big question would be, hey, are we going to actually expand against this 115.26? I don't know if you can see the prices, so let me move this over a little bit. Are we actually going to expand against this 115.26? Because again, these were the highs that we swept liquidity into, and these are what we need to get above to showcase that liquidity sweeping. So really, if we turn this in inversion, the one thing that this could do is stop here. If this gets above these highs, I would not count on anything in here. And this is kind of a good understanding to have. I could be totally wrong. Who knows? But in general, this range of price that's above the liquidity sweep, after you've left away from the liquidity sweep a lot, if you get above those old highs again, don't expect this to really hold because this whole range was just taking liquidity. So there's no more liquidity resting up here. The new highs to look out for a liquidity sweep would be to be taking price up to 116.08. So if we start to see instances of price action starting to potentially turn this fair value gap inversion, I would start to really look at this 115.26 and say, hey, if we could get above 115.26, we're going to get pretty damn aggressive in a 116.08. and that's what I would potentially argue. So we push down. We're not closing back outside of the fair value gap yet. We push down again, and we trade to the high. So this is an educational moment here as well, because notice how we didn't trade into the lower fair value gap. So some people might be sitting here waiting for price action to trade into this lower fair value gap, but this is actually a super highly aggressive sign for me. When I see price action doing this, my immediate thought is this is going to get super aggressive. And the reason why is because leaving a fair value gap open at the bottom is similar to immediate rebalancing. So what I mean by that is a normal immediate rebalance. I don't know if we could find one quickly here. A normal immediate rebalance. No, we can't find one quickly. A normal immediate rebalances causes kind of very aggressive price action, just like leaving fair value gaps open at the bottom of the market does. And notice how we're staying with the bodies of the candles in specific are staying with, and I'm just going to turn this yellow, I think it's a better color, are staying within the range of this potential fair value gap. So if we could leave this open, you could start to see some quick expansion. And like I said, I wouldn't really expect anything in this range to hold. The first test would be, can we get above 115.26 and stay above it? And really, there's nothing until these highs. And if you look at the market, we just swept these lows. So this is the leg that we should be trying to push up into at 116.08, potentially. So as of right now in price action, I would have to be very bullish. I believe I would have to be bullish at least up into 115.26. So let's see what goes on here. We have a bit of a down candle. This candle trades just a little bit lower, nothing too crazy. It's probably trading into one of the levels inside of this fair value gap. I don't want to do too much technical analysis. That's not the point of this video. However, let's take off this. In this particular example could be useful. Notice how it's still staying within the range of this fair value gap. This is super, super, super bullish looking. And I wouldn't be surprised. We actually did we close above? Hold up. No, we closed at it. I wouldn't be surprised if in the very next candle, this thing ends up just moving. I mean, there's really nothing to do. You're likely to not fall outside the range of this. At this point, you left the fair value gap open. That's an aggressive signature in price action. You have the liquidity sweep. Everything's kind of in line. And you do. You absolutely rock it. You push down one time into this fair value gap one more time, and you just rock it right up. And interestingly enough, you rock it up above 15.26. So the fact that you're above 15.26 now is very interesting. You also closed above this particular wick. You also closed above this particular wick. You also closed above this particular wick as well. In this particular case, I think because you have all three of these, I would be using the bigger one. But that's not the point of today. Today is very, very small amounts of. Ideally today is very small amounts of technical analysis. So I don't want to be doing too much here. So let's play one more candle. It's holding above 15.26, and you just created a fair value gap on this level. I think that this is highly likely just to get yourself up into 16.08, so long as you stay below 15.26. So I'm just going to fast forward to it until either you expand below 26 or you get into 08. You trade into that fair value gap once, you start to push, and now you broke the high. So now this becomes a very important part in price action, because now we just broke above this high. The big question is, are we going to start a trending market, or are we going to get more range bound? So generally, the market has about a 70% chance of not being expansive. It has like a 70% chance of just staying within a well-defined range. Those are just the odds that the market has. That's just the way it is. So you should always go into a new high, breaking a new high. You should always go into it with the understanding that you could roll over. And the first sign of that is just like what happened back here, is if you get underneath those highs and you just push. So let's play the candles forward a little bit more. I would have to still be bullish at this point because we're just pushing into a new high. So we fall down. We actually immediate rebalance here, which is great to see. So I would have to still be bullish. Price action pushes. get a big body candle that closes a little bit weak. That's all right. Pushes again. Potentially gain that as an order block. You're trying to push the high. And this thing fails a little bit. So you just failed the immediate rebalance. At this point, really, if I was doing this with technical analysis, I would say this wick here is its last hope. You need to stay within the range of this wick. You treat this just like you would a fair value gap. If you're not staying within the range of this wick to go higher, then it's probably not going to expand higher. And really, mainly, the big thing here is also you need to be staying above 1608. Because now this gets a little bit sketchy at this point because you pushed up. Notice how, again, I've said this before in some of these price action videos. In strong trends, the candles close near their high. In strong trends, the candles close near their high. In strong trends, the candles close near the high. And usually when the trend is coming to a stall, you start to get tinier body candles. You start to get big wicks. You start to get candles not necessarily closing near their high. And that's kind of what you're having here, right? You pushed up in a pretty strong way, and then you started getting pretty tiny bodies. I would still have to be bullish, I believe, to be quite honest, but it's getting a little bit sketchy, and just understanding that the odds are in its favor to stay within a range. Like I said, about a 70% chance to stay within a range. There is a world where this could start rolling over. Now, I would love to have a high time frame level right now. If there was a high time frame level right here, guess what? I would say this is rolling over. We're going to go run these lower lows down here. But, unfortunately, we don't have a high time frame level in this particular case. So there's nothing much to go off of. And I would have to see another couple candles to really make my decision. Okay, we push lower. We close beneath these highs. So the next couple candles, we close beneath these highs. And importantly, we're also right in the midpoint of that wick. Okay, so we traded right down into 1602. But we also closed above these highs. So right now in price action, it has to make a choice. Like right now, it's either like if this wants to get going for real, you need to get above these highs and go and create a trend and start breaking into new highs and start doing typical trending market shit, right? If the next candle or the next couple candles, you see something where it pushes up into these old highs and it rejects and rejects and rejects, this thing's going to roll over and it's going to go try for the other side of the range. Because in range-bound markets, which it seems like we're more or less in, right? We're in a range-bound market. When you test the top of the range, you go test the bottom, and you go test the top, and you go test the bottom, and you go test the top. And that's just how range-bound markets work. So really, this thing has a big choice and a big moment here. If we can expand above 1608, consider that this is going to turn into a trend. This is going to turn into a trend. That starts a bigger move in the market. If we can't get back above 1608, this is not going to start into a trend, and instead it's going to fall back within the range that it was already trading in, and it's going to fall back down into the range. So let's see. Okay, so this is not too sweet. This is actually exactly what you don't want to see if you're bullish, right? Because all we did here, we just traded up, traded into the order block level, and now we're underneath 1608. We traded into the fair value gap. This is super bad for price action, low key. I would be bearish in this moment. I think this is enough to be bearish. If you want a little bit more confirmation for being bearish, you could wait until we close outside of the range of this wick. I think you could be bearish, but my eyes would immediately drop down into these lows. Why these lows? Why these lows out of everything? Because if you look, we still are in this liquidity sweep, right? We swept once, we swept twice. This is the range that we're participating in from here to here, okay? So we just ran on one side. So this is the run that we're participating in. This is the run that we're participating in. So if this is going to go to the other side of the range and get range bound, it's going to look something like this, right? So I would start to have my eyes on 1419 here. We have a nice push down. It's just a big body candle, it seems. Pushes up again. Trades down to the low end of this wick. Again, if you want the most amount of confirmation, you could be waiting for potentially the low end of this wick to get closed underneath. You could, because this wick is here, I wouldn't be using this fair value gap, but you could treat this as like it's an inversion fair value gap. At this point in time, if you were to trade above 1612, consider the bearish idea more or less done, unless you just run these highs. So let's push this again. And we have a big sell-off. Cool. And so at this point, we're underneath this wick. Notice what we rejected again. We rejected right off that 1608. So this is pretty wicked. There's two things this could do. Okay, there's two things this could do. Either, and this is the two things that it could always do. If this is starting a trend, what's going to happen? You're likely going to hold off the lows. You're likely going to continue pushing up. If this is being range bound, what's going to happen? You're going to go like this. Okay, simple shit, simple stuff. So, really the first things that could potentially help you here, if anything's going going to work or whatever, I guarantee there's a higher time frame order block here. If I had to guess, there is. So there is a higher time frame order block here in the way of that 4 hour. Is there a daily? There is a daily order block here also. Okay, I know I said I want to go use the higher time frame, but if this daily order block holds, oh, why am I going on 215? If this daily order block holds, which is the highest time frame order block within this range, then we don't necessarily need to go into these lows, and we could decide what happens inside of here. And there's going to be some sort of internal price action that gets created off of this, which could lead us to trying to push into new highs and trying to run again. If we just slip through that hard, if we just slip through this hard retest, we're just going to go right to these lows. But I would be bearish enough at this point to say, hey, at the very least, you're very likely to get into this daily order block. It's the high time frame level there. There's probably a higher time frame level there too. I don't want to go too high of a time frame. I don't want to be looking at technical analysis too much. But at this point, you've held off these highs. You've shown a willingness to roll over. You showed a willingness to not expand. I think at the very least, we could reach down in 1511 if I had to guess. That would make a lot of sense to me. So price pushes. With this particular push, we push up into just whatever. I don't think there's anything too relevant about this push. The one thing that I will say, though, is I wouldn't want to see you back above 1608. Like, if you push into 1608 again, I want to see you reject hard. I don't want to see you back up there. Price pushes again. Again, it's not getting into 1608, and it's starting to reject. This type of rejection, to me, is almost like a confirmation, if you will, that price is actually doing what I want. And notice this order block, okay? So what do I mean by this order block? Well, look, price swept these lows, but we also know that we're rejecting off these highs, so we kind of want lower price action here. This is the order block that you would have to gain for price to go higher, right? Price got up here. It could hold inside of this order block and start to create a trend. And notice how you can't even get above the open of that order block. Nonetheless, you can't even gain the order block. You're not getting into 1608, which is the high, and you can't even get above the open, really. So part of me would argue that, like, something like this way, in the case that there was, let's just imagine quickly that there was a high time frame level here, this would be a short that I would take. I think this is totally a valid short at this point, because you have a bias down into these lows, for example. You have a reason to want to get lower. You have a liquidity sweep that you have, and there's other trades that we're taking in this range. This is just the first one that I'm pointing out. You're rejecting underneath 116.08. If there was a high time frame level here, which I don't know if there is or not, then the midpoint of this wick, I would short the shit out of it to get down at least into 1511. So we slam 1603 again, push lower, and right down into 1511. So this becomes a more or less a decision point here, if or if not 1511 holds. If 1511 holds, we could try to make our way back up. And what would that be doing? It would be starting to create potentially a trending market. If 1511 doesn't hold, then we're going to slip to 1419. That's just the way that it's going to be. So, let's see a couple more candles. So 1511 is holding. And one thing that I want to bring your attention to immediately here is the fact that this turned inversion and it completely got disrespected as an inversion fair value gap. That to me, bullish sign. I think that we're going to go run these highs. I think that this is trying to turn into a little bit more of a trending market. Bullish sign, I think that we're going to go run these highs. I think it's turning into a little bit more of a trending market here. Push up again. Couple more candles. Run down into this order block. Okay, order block is fine. There's also a world where potentially we could go and retest these lows. Again, that's going to happen about 55% of the time. So there's about an even chance of us retesting the lows or not. This order block is also fine to just hold if it wants to. This is the order block right off of the daily. Still holding over. Still holding over. Still holding over. And now we start to push. So cool. At this very moment, I believe that, this is just going to go. This is just going to go. You're going to go try for these highs again, just like before. And you'll notice this a lot. Like price action does the same shit over and over again. If we could get above these highs, it's going to get right up into 17. I think it's going to get up into 17 anyways. You're holding that daily order block. That's the higher level. You've started more of a trend-based market. So I would be biased up into 16, 17. We get up into there. Cool. Great. So now, same thing. Watching how it's interacting with its highs. Is it trying to expand or not? Pushes. Failing to get above 16, 17. Failing to get above 16, 17. Rejecting hard off of 16, 17. This doesn't look too sweet. All of a sudden, I hate this type of market condition. I absolutely hate this type of market condition where you're just running, not expanding, running, not expanding, running, not expanding. Personally, I think it's like one of the worst types of market conditions to trade in. Some people thrive in it. I fucking hate it. But so be it. But right now we're not expanding higher. It's just not happening. So these are the cleanest equal lows on the bottom. And then we have these even lower if that's where it wants to get to. So we'll see. Oh, okay. Well, we immediately get down in those 1325s. It's trying to push up off them. Retesting them. Retesting them. Okay. So here's kind of an educational moment. In this position where you're not expanding through the lows, you're not expanding through the highs, if this was going to be a trending market, we would expect this sweep of liquidity to be acting as something to fuel a move higher. So in this moment, really, if this range of price up here, if the high holds again, when I mean the high, just like you pull up and you reject off the high, that's kind of showing you that the trend is almost kind of failing hard. And to be honest, that probably leads down into here if that happens. Because if this is really starting a trend up, which is what you would assume it's trying to do, if this is really starting a trend up, this liquidity sweep here should be used as fuel to push into new highs and run higher. So my main focus going into this would be I really want to see how price action is interacting with something like this inversion fair value gap. Depending on how we interact with this inversion fair value gap right here, if this holds, I think the market's cooked. Hopefully that makes sense why. If we could push through that, the market's totally fine though. So it pushes up a little bit. It's rejecting off the high. Sweeps the high again. At this point, we're closing back underneath it. Try to push up into it again. It's failing. This is cooked. This to me is very obviously about to roll over hard. And again, the reason is because you're trying to trend, you're trying to trend, you're trying to trend. If this is actually going to start a real move higher, this liquidity sweep, all liquidity sweeps on bottom, should be utilized to push into new highs. The fact that this is not being utilized to push into a new high and you're rolling over off of this makes me believe this looks deathly. And the problem is, like, you've already retested this low. You've already swept liquidity here. There's no lows here. You already swept the lows here. So it's like it's just here or here. You've left everything. Everything's just cooked. Everything is absolutely cooked in this market. This was really its one chance to move, and it didn't. Hopefully that makes sense. If this was a daily chart, if this was anything, I would be getting very, very bearish on this market at this moment. So we start to push lower, and I'd imagine we just get a pretty aggressive trend lower, if I had to guess. And probably everything on the way down is holding. So notice how we push up. We fail at these lows right in that volume imbalance also. We trade up, fill in this fair value gap. Fill in this fair value gap. That holds. We push up, volume imbalance, holds. This is a very aggressive trending type of market now. We're no longer in a very range-bound market. We're in a very aggressively trending market because of the aspects of there not being anything here except 1419 that we should be running into. To me, that's super aggressively trending. We push up. Where do we push up into? This is the big wick. Okay, push right up into there. Also, this fair value gap, of course. We get a big rejection off the lows, but we end up just continuing to hold this fair value gap, which is exactly what we'd expect. We'd expect everything to hold on the way down because we've entered this super aggressive trending market. So pretty much everything should hold. Notice how it's not really... The one thing that I want you to really pay attention here is that although this is getting really trending down and we did ultimately take these lows, it's not creating anything. It's not leaving anything in these markets. It didn't leave anything. Like, we don't have fair value gaps on the way up that aren't traded into. We have like this big wick. We have all this stuff. But if this starts to create a low here, this could potentially get aggressive. I'd have to stay bearish though as of this point, just because we were just moving down. So we swept those lows. It's trying to push. We get a big body candle up. At this point, I'd be back to being bullish. We just swept all the lows in this range. My eyes would be on the opposing highs up here. See if we could potentially get into them. At this point, again, there's like no fair value gaps. There's not much of anything. This is the first fair value gap that we have going up that we just traded into as well. If we could turn this inversion, use it as an inversion fair value gap and run, then the market's looking very bullish. So we trade up into it. Trade up into it again. Again, notice how we're not really digging into that fair value gap. That's the same thing that happened over here. So starting to anticipate a little bit more aggression. This video is about to end, by the way. I don't know how much longer I can do this. My brain is starting to get a little bit fried. We push up through here. So the lowest that I would accept is into this fair value gap. Okay, this thing's about to rocket. This thing's about to absolutely skyrocket. We just hit an immediate rebalance off the sweep the whole range. Overall, we're bullish, right? We're in a bullish uptrend. We just ran the other side. We held the order block at the low, turned this inversion. There's nothing really up here. I would really expect this to just fly up into 116 probably, in a pretty aggressive fashion. Okay, we created equal lows here. So this could be like an interesting like side setup potentially. We have highs up here that price could run. I still think we're going to make our way up into 1619. We have lows on the other side. This is probably going to be just a re-entry for people who want to get long. I pressed play on accident. Price pushed down. Where did we trade into? Traded into this fair value gap again. But also right into this inversion fair value gap also. This whole range was holding inside this inversion fair value gap, but in more specific, what we traded into is just this fair value gap here. After sweeping these lows, this is like the secondary entry. Personally, I actually prefer these types of entries a little bit more than these types of entries, and now we are pushing up into the high. With that, if you want to come to this date and finish off this price action, you can. This is 2023. You could see the date at the bottom of my screen. Hopefully this helped. This type of price action isn't that big of my favorite, but it's still readable. And if you could just read the chart, you can make very good assumptions about your daily bias, very good assumptions about everything, really. Be able to change your bias intraday. And the way that you play is you just put high time frame levels on this, and you're reading price action at the high time frame levels. So I wouldn't expect your reading price action to be this good during a real live trading session. My reading price action is not this good during a real live trading session. When you're in hindsight, you have the time. You're not thinking about executing or whatever. It's going to be a little bit better, but ideally you could get pretty close to this level of goodness when it comes to reading price action, and it's going to seriously help you do well in trading. With that being said, hope you guys enjoy this video. I'll see you guys next time. All right, today is the 13th of August, and we're going to recap the day. I did not trade today. I did not have enough sleep, so I opted to not participate in today's price action. So take what I will say about today's price action with a grain of salt. However, I think I've traded live in front of a lot of people for long enough to where, even if I am talking in hindsight, I'm more or less saying what I would have done. Just take it with a grain of salt, since I did not actually participate in today's price action. So, as we were saying yesterday, again, highest time frame down always. We start with it. We have these yearly levels. Okay, both of them inside of this order block. We also have the mean threshold, but that's way far down there. I wouldn't give too much credit to it yet. So far, all we've done, as I said last recap, I am bullish on the week. So far, all we've done is we ran underneath this low last week. We got back above the yearlies, came down into them, came down into the open of the yearly, and so far we've just been trending higher. So today, majority of the levels that I would have been looking at, especially because price opened above the bullish order block, I would have been looking at the bullish order block levels. So the high of this comes at 872.75, and also the open. You never want to mark the mean threshold here. And the reason for that is because these yearlies are too close proximity. So I would rather use these levels inside of here. And because I'm bullish, I'm not necessarily looking at these bearish order block levels either. For the same case, we opened around here on the day. I wouldn't be using this inversion fair value gap or this weekly fair value gap either. Simply put, because we have our higher time frame levels coming from the monthly that jet out right here. The only other level that you could potentially use today, reasonably, I think, is the mean threshold of this ungained weekly at 1951.50. So that comes in again at 1951.50, representing, if we get over it, if we get over top of it, representing the potential attempt to go gain this weekly order block. We drop down to the daily chart here. Another thing you could have potentially looked at today was this daily volume imbalance. Okay, not looking at that to just reject and hold price down or anything. A lot of times with volume imbalances, the goal is to close over them. Okay, that's usually the goal. But really, I think this is all the levels that I would have been interested in today, and not even these yearlies. Those were just for demonstration of what was going on, and we can drop down to a lower time frame now. So, market opened, and I'm going to do this a little bit differently. Since I didn't trade this day, I'm going to go candle by candle and kind of showcase how I would have traded this day if I was playing it. At least how I imagine I would have traded this day if I was playing it. So, market opened here. Whoa. Market open, it doesn't matter. Market opened here, and we weren't around any of our high time frame levels at all. So, no real case to be made to run them. Interestingly enough, we did not, we don't have really any clear highs before the market opens here. We already ran a bunch of them. We don't really have any clear equal highs up here, this whole range. And really, we do have equal lows down here, or over here. However, as you heard from yesterday's recap, I mentioned that I believe that these may just wait till Wednesday to get ran. I don't know if we'll run them on Wednesday. That's not up to me, but I think the likelihood of them getting ran will happen on Wednesday, not Monday or Tuesday, for a couple reasons. Wednesday tends to be the most expansive day of the week. Wednesday tends to be the most expensive day of the week. So if this is going to roll over, it'll probably roll over on Wednesday. I don't know if these will be ran at all. But if today would have held under 72.75, which is the high end of that monthly, we could have fell off into 15 easily. So going into today, my idea would have been either we hold off of this and try to make our way down into these lows if we can get underneath 763, or we hold off of this, make our way back down into 63.75 and then run, or we get above 72.75 and just run all the way up into the next high time frame level. This daily volume imbalance, I wouldn't really classify as a high time frame level, almost to the extent that you could probably just remove that from your chart if you wanted to. I highly doubt I would have been even looking at this daily volume imbalance. However, I'm going to leave it here just for demonstration. So cool. The market opens. We push. We're creating a little high right below this level. We push up into it. I think this is the first potential opportunity here. A bit of a low quality opportunity, I would argue, because you should be bullish today. You really should be bullish today, especially considering, right, we look at 63.75 on the PDR up into 72. Up into 72.75, and you notice right on market open we push down into 818.25. So if this is the PDR level between here and here, that should get us at least up into 72.75, and getting there's really a huge range of price up to here, understanding that these lows are not likely to be ran today. They're likely to be ran later in the week for the reasons that I mentioned last time. You should be bullish today. So the fact that this PDR held and we ran up into 72, you could try to short this. I think this is like a low quality short, probably like a C tier, but on the retest of this level, you could try. So that would look something like this off 72.75. Again, the problem with this trade is you don't have a lot, right? I would argue you don't really have your bias in favor, unless you were short bias. If you were short bias, then this is a fine trade in my opinion. But everything's really pointing to you being long bias, especially with this PDR holding and you being above these monthly levels. These are bullish monthly order block levels, to be clear, and those lows not needing to be ran yet. So if you were bearish, I don't necessarily mind a trade like this. You could have tried to get it a little bit higher. You would not have gotten the midpoint of this unless you ran a bit. So just off of here, at this point, you would have had to be break even. Price could push down. Price pushes up again. You would not have been gotten stopped out break even. You still wouldn't have been stopped out break even. At this point, you could have trailed it to above that high. Price falls down. You could have been trailed to right here at this point. Price pushes down. You could have been trailed to above this candle. Price pushes down. You got a big body candle in the range. You could be trailed to here. Price pushes down. You get a big up close. At this point, you would just leave the trail where it is, to be honest, and it pushes up. So if you were bearish in the morning and you had taken this short, which I think is fine, you would have been trailed out for about 1 hour. Cool, whatever. It is what it is. I think at this point, you really have to start considering the fact that this might push. So usually on second pushes up into a range, I personally, like if you have price action that looks like this, okay? If you have price action that looks like this, I don't necessarily really enjoy entering on retracement. So what do I mean by that is like if price action runs here. I don't like entering in this type of retracement into a move. And the reason for that is as followed. If the market made a new high here and then it's coming back up into that high, well, now the market has to make a decision. Is it going to start a trend by breaking a new low, or is it going to expand into a new high? I would much prefer entering on the first leg down into a move rather than entering on a retracement. A lot of times you'll hear people say, oh, retracements are often the best times to enter trades, and I would have to hard disagree with that. I think that retracements back up into a high become some of the lowest probability positions you could take, especially if the market is threatening to be trendy. So if I was playing price right here, I would be cautious of this 872, understanding that, hey, if we push up and hold it, okay, maybe there could be some sort of reentry inside of this range to take us lower into the 763, into these lows, potentially much lower. However, understanding that my bias is still bullish, if we get above 872.75, hold above it and rock it, I want to be participating in this long if I can, ideally. So, and here we go, right? Price pushes right through that level, no stopping. So considering it didn't stop at all, you would not have tried anything here. You wouldn't have done anything here. Now, if price can go ahead and close above the range of this wick, why am I using the wick in this particular example? Well, you notice how there's no fair value gaps in this down leg. So I would rather use the wick here. So if price can close above the wick in this example, you could be pretty sure it's being bullish. But this wick doesn't really matter in this case. You could remove this wick actually, because what matters is the high time frame level being 872.75. This is the high end of that monthly order block. So price trades down into there. I think in this moment, I probably would have had a limit order at 72.75 to try to get long on a retest. I don't know if it would have given it to me, but I very likely would have been trying for this. And it doesn't give it for me. Usually with big wicks like this, if you expand higher immediately, I only like these big wicks immediately after. And why would have I considered this big wick over anything else? Well, if you look at it, it's coming off of fully filling this fair value gap, and it's coming off of this complete regaining of the monthly level. So the only downside to it is you didn't close this, but you do more or less have an internal liquidity sweep that happened here, pushed down, pushed up, and this could have been a potential entry for you. This wouldn't, again, I wouldn't consider a very A plus setup. I would consider this like a B. There is an A plus setup later today that I will showcase though. So at this point, my hands would be off. More or less, my hands would be completely off. Why? Because we're not around any high time frame levels. However, you could start to potentially drag a PDR. So 72.75, right? And why can you drag a PDR? Right, because this daily isn't really a high time frame level. That's kind of in the middle of everything, right? I would much rather be using this weekly order block than that daily right there. So really the high time frame level, the gap that exists here is from 72.75 up to 51.50. So that is a big range of price where there's nothing. So what can you do? Well, you could drag a PDR from 72.75. You could drag a PDR level from, excuse me, where the fuck did this go? Drag a PDR level from 71.75 to 72.75 here. And because it's such a big gap, you could also throw on the second layer of the PDR. If you haven't learned about PDRs, go watch the video about them. I'm not going to explain them in this video. So you could throw on the second layer of the PDR. So understanding that holding under or holding over 872.75 should launch the market up and potentially above, because if we're bullish, we should be getting above and holding this 1951.50. We can now have the PDR levels in between. Okay, we can now have the PDR levels in between. So market comes back down. Okay, and notice in this particular case, we try to push down. We sweep the low. It's a very, very shallow sweep, but we do sweep it. And then here, we close back above the monthly. To me, this is enough internal confirmation. For some people, this might not be enough internal confirmation. For me, this is enough internal confirmation to want to go long at 72.75 here. Right here. Now, the safest stop loss for a position like this would be underneath this low. My stop loss would be underneath this white candle. Okay, so price ticks down, trades into 72.75. I would be break even at this point. Okay, price rushes. When I get a giant candle like this is a prime candidate to drop down to a 15-second chart because you don't really have any good spots to trail on a 1 minute. Or let's imagine that you were, because this could be applicable to anybody, right? Like imagine this was a daily chart and your entry was on a daily right here. And now the daily candle's like this and you're like, where can I trail my stop loss? Just drop down a time frame or two and find a good spot to trail. So in this particular case, again, leaving fair value gaps open at the bottom of a range is always nice to do. So the first idea to trail would be underneath this low. We've already traded into the inversion fair value gap here. So the next idea to trail would be right under here. And the most aggressive way to trail would be saying, hey, we just ran these highs. I don't want you to gain this order block. So you could be, in theory, right underneath 896 if you wanted to. Personally, I think I would be at 889.50, just because this was the test into the inversion fair value gap here, where we closed above it and retested down into it. So I think I would be here at this point. We got a big body candle out of the range. You can move it up to here at this point to 18,900. The reason why you want to be so aggressive at this point is because you just ran this high, and this is now, it would be reasonable for this to roll over in case the market wanted to create equal highs from here to here and then create a range and use this as a liquidity sweep to run lower. You don't want to be caught up in a situation like that. So you can be trailed to 18,900 here. And price breaks down. So if I was in this trade and I had taken this trade, that would have been trailed out for 7.79 R right there. And then we can move back. Okay, and just understand that we just had equal lows that got created at the bottom of the chart as well. Okay, and at this point we rush up. We trade right into the PDR level at 917.50. Okay, price pushes, pushes back, tries to push above this high, fails this high, can't expand above the previous highs either. This to me looks like a liquidity sweep. My hands are off. What are my hands are off until? My hands are off until we either get above here and create some sort of ability to run. Why? Because I need a high time frame level. I need a liquidity sweep in order to play. Now you could be arguing, well, we have this fair value gap right here that just got played off this internal liquidity sweep. Yes, but notice what's happening. We have this internal liquidity sweep that just ran up and it's failing to push above these highs. If we're failing to push above these highs, we need to be very cautious to the idea that the creation of these equal lows can now be swept. You can now regain the level, and that's when the market might go. So during this range, and especially here, you just failed to expand the low and you just failed to expand the high. So at this point, the market's choppy. You should have your hands off. Okay. So keep playing this until it gives you, what you want. It tries to push up above 917.50 again, fails. Okay, notice that it fails again. This is extremely weak. Why is this extremely weak? Because look, you had an internal liquidity sweep. You try to expand and you failed off at 917. If you wanted to, and I don't know if the market gives you this because I have not really looked too deeply into this price action. If you wanted to, you could have potentially shorted this mean threshold of this order block before it gained. I would have to go into the lower time frame chart to see if it would have given you that, and it would have. So you could have gone short here at this moment. I believe that this is a relatively fine setup. So the market rolled underneath these lows. This should have onset a trending market if we were going to get trendy in this moment. However, you got slammed into 917.50, failed off at 917.50, got beneath the mean threshold here, pushed up, rejected. You could have gone short on this candle, 907.50, with a stop loss right above here if you wanted to. Very aggressive short. I wouldn't necessarily. I mean, it has all this. It has everything you look for in a setup besides bias. So that because it doesn't have your bias, I would consider this a relatively low quality trade. And also, this is not a trade that I would particularly take, simply because the risk reward is just not enough. If you notice, like, this is almost no risk reward at all. The other position that you could have taken is right off of 1750 if you were really excited about this, with a stop loss above that white candle's high. If you saw this rejection, if you saw it close under, the only thing I don't like about this is you're shorting into such a strong candle. So either one of those trades, I would probably class as like a B. This one, I would class as like a B. It's not a perfect setup. It has all the elements you look for besides bias, but it's not great. And this one, I would really, really class as like a pretty low probability trade to play out, even though it did. I would class this as a fairly low probability trade to play out. But the risk reward is huge. So would I try it? Probably. 50-50 if I would have tried that in a moment. If I was bearish on the day, then I really would have tried that. What would have thrown me off in this moment to take the short, though, is the fact that we were holding over the monthly. So, and I would have been more interested in the long anyways. And not to mention, like, we're coming close to dead hour that, you don't really want to be participating too much. So you don't want to get caught up here, right? We trade back down into the high time frame level. You can say, oh, we have an internal liquidity sweep, blah, blah, blah. But notice where we are. We're coming into the dead hour, and we have these equal lows. Look back, right? We had a sweep of these highs. This is the opposing liquidity for it. Stay out of the market until either you sweep these lows and regain the level, or you sweep these lows, fall underneath the level, or get above 917.50. You cannot trade in the middle. You're going to fuck yourself over. Stop being stupid. So price pushes, 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 and then boom, right here. So in this moment, we get a very shallow run of those lows. So when you get an extremely shallow run of equal lows, that whole setup becomes highly, highly less likely to play out. You want a more substantial run of those lows often. However, I think it's a fine trade to try. So I wouldn't be mad if somebody would have tried the midpoint of this wick. And the only reason is because you closed back above the monthly. If you had not have closed back above that monthly level here at 872.75, I would not tolerate the midpoint of this wick as a trade. But let's say you get filled, you're filled here. You have to go break even immediately on this position. And the reason is because this is such a shallow run of these lows. At any moment, price is very, very, very prone to just boom, spiking those lows one more time. And this could just be extra liquidity generation underneath this whole range. So you have to be incredibly careful if you want to take this trade. It does have all the elements you look for, but the super shallow sweep of those lows would highly, highly throw me off. I don't know if I would take this position. If I did, then I would be break even immediately. So the second that this candle pushed back above 872.75, I would be moving my stop loss to break even in this position. And it would have stopped me out break even. And the trade idea is still on. Okay, so it's important to understand that even if you get stopped out break even, it doesn't mean the trade idea is a complete fluke. It doesn't mean it's wrong. It doesn't mean anything like that. This actually now looks better. So this is now a position where I would be highly, highly, highly thinking about entering again. Now, I think a fair entry here, if you wanted to be a bit safer, is now just retesting 72.75. Because now this is pretty much an A+ setup at this point. You have the PDR telling you that 51 is going to be the next place to trade. This is confirming that your PDR is right. The fact that 917.50 was holding. You have your internal liquidity sweep. I'd argue this is enough internal confirmation. The fact that you closed back over 72.75. You could, if you were swing trading, and didn't want to worry about managing your position or anything, you could have a trade that looks like this. And you would have been filled, and that could have been your position. Me personally, although I think this trade is fine. To be clear, I think this trade is fine. You should be taking trades like this. You don't need to be optimizing your stop loss like I do. This is a fine trade to try. Personally, I would not try this. The reason is because that stop loss is too big for me. Stop loss is too big for me. I'm not going to be holding all the way up into 51.50 very likely. So instead, what I would be watching is this fair value gap. Okay, if this fair value gap can turn inversion, then it's good. Why am I using this fair value gap? Because you have no big wick here, right? So if you had a big wick in this 6:32 a.m. candle to push up here, then I would be waiting for the wick to get closed over. But instead, you have the fair value gap. So price pushes, fails to close the fair value gap, pushes lower, trades into this low fair value gap, and turns this inversion. So at this point, what have you done? You have everything you want. You retested the high time frame level. This is critical because if this retest of the high time frame level had not happened, then I would have expected price to come back down and retest the level. However, because the retest of that level happened, now you can hold higher in the move. And this low that tested into this fair value gap should stay intact. Okay? So price pushes right there. Boom. Right at the high end of this inversion fair value gap. You could have gone long there if you wanted to. Okay. If you went long here, your trade would look something like this. You get long here. Ideally, you put your entry like a tick above so you actually get filled. And you could be trying to target up here. You could be trying to target all the way up into that weekly, really, because there's a lack of high time frame levels. That could have been a position that you took, and that would have been, in my opinion, more or less an A+ setup. Now, you can't go break even quickly if you do that. Okay? If you enter there with a stop loss here, you can't go break even quickly. Why? Because you need to give room for price to trade down into this wick, okay, until this order block gets gained. If this order block gets gained, price does not need room to trade down into this wick. Once this order block gets gained, price does not need room to trade down in this wick. I don't know why I just said that twice, but I did. Until that happens, you need to give it room. So you can't go break even until this order block gets gained. So price pushes down first. Let let me just go onto a 15-second chart. Yeah, as you can see, price pushes down first and then up, which then gains this order block. At this point in time, if you were in the trade off this inversion fair value gap, you could have gone break even. At this point in time, though, probably more or less the trade that I would have been considering would have been 897.50, the mean threshold of this order block at this point. Everything's in line. This is also the miniature PDR from here to here. If you draw that out, it's going to be right here. You have the liquidity sweep. You're coming off the high time frame level. I'm biased up into 51.50. Everything's looking pretty. Everything's looking good. You could get long here. I would have gone break even immediately. I would have been break even. We had a big wick. I would have gone long on the mean threshold again at 97.50. I would have gone long on it again, putting my stop loss below this wick. Save your stop losses below the actual order block. I would have gone below this wick. Why would I have gone break even on the first one? Because my personal rules for break even is that I need to, if it hits my entry perfectly, I'm break even. If it runs away from my entry at all, I'm break even, etc. So I would have gone long here. Very highly likely I would have gone long here. Again, this is hindsight. I did not take these trades, but I've traded live in calls long enough where you could trust the fact that what I'm saying is real, what I'm saying is true. When I say I would have entered this trade, I would have entered this trade. I know what I'm looking for. I know what I would have done. And I've traded live for a very long time. I just didn't get enough sleep today. So this would have been the position that I was in. I probably would not have gone to trail it yet, simply because this is not a very convincing candle. This is a fairly convincing candle. At this point, I very likely would have been trailed underneath here for 42, but you could just be break even. I would either be trailed to 42 or break even here, since it's not that big of a difference. Now we get a very big body candle out of the range. You could trail it up to 909. We push up again, very big body candle. You could trail it right underneath that for 542R. You could push up again. You could trail it right underneath here for 705. Immediate rebalance. Trail to the immediate rebalance. You could lock in 8.7, and you would have been trailed out. You'd have been trailed out right here for 8.7R. And I think that's the best trade. I think those are more or less the trades that I would take today. And I probably would have logged off after that. Knowing me, I probably would have called it a day. I will give it up to you to watch how price action interacts with, the levels inside of here. I want to show you, mark this daily volume imbalance on your screen and go down to a low time frame. Just kind of appreciate how price action fucks around inside of this, and how it just stays inside of here for the most part. It gets inside of it, it stays above it, it's staying above the PDR. Everything looks good for the most part. Right, price action falls. It fucks around inside of this range again, inside of the range right next to the PDR, and ideally we run right above 51.50, and we are since then holding above 51.50 only after coming right back down into that PDR level. So I explained most of the price action that I think I would have participated in today, which would have been here to here. I think I would have left after that second trade. You can go ahead on your own, and with these levels and with the ideas that I was talking about, understanding that holding off of here should have played to here. What I want you to do is from where I got trailed out, so where was that? Right here. If I would have traded from where I got trailed out, just read this price action and read it with an understanding that you don't necessarily need high time frame levels in order to participate in the move. There's a huge gap between the high time frame levels. You could take anything, okay? And just kind of study the price action in this range to see how you would have participated. This is the range I would have participated in. This is an extremely clear setup. I think this is an A+ setup that generated today. Hopefully people did well today. Again, I didn't trade today. I didn't sleep enough. But this is the recap. Hopefully this helps somebody. See you guys later. All right. So I did not trade with my real account today. That was due to red folder news late in the day. Donald Trump spoke.
which was kind of random. Earlier in the week, it did not show as red folder today, but this morning when I checked Forex Factory, it was there. So I opted out to not trade. However, that red folder was after market open. So I did, for the first time, and I think this may be something that I do in the future, if you guys are potentially interested. I did still participate on a demo account, okay, a fake demo paper trading account. But I thought that today, I did it in the live call with a bunch of you guys in the call. So if you missed it, I was in the Discord call and I was watching today's price action a little bit with you guys in it. I took one setup, but I think this setup has a lot of conversation that could be talked about it. I do want to reiterate, I did not trade live today. And based on my rules, I would not trade live today again, because I do not trade before red folder news. But I did participate in a way, and I also did promise a Patreon video today because I missed the live session. So let's get into it. I think it's going to be more than a trade review. I think that this will actually have a lot of benefit for a lot of people. So first off, we're going to talk about the levels that I was looking at going into the day. So let's go ahead and get rid of everything. First and foremost, on a monthly chart currently, we have two wicks in play. Okay, we have one that we closed over. So we closed over top of this wick inside of this candle. You see, so far this month, we've traded down into the midpoint of that, right? Because when you close over a wick, when you close over anything in the market can be used as inversion. So nothing different with wicks. And you have this wick right here, which is also fine monthly levels to use. It is a little bit messy. I will give you that. I would be lying if I said that the high time frame was necessarily clean. It is not clean, okay? But sometimes you got to fucking deal with it. So we're going to be talking about that as well. So drop down onto a weekly chart. Again, my protocol for looking for high time frame levels, just as a reminder for a lot of people, it is 100% mechanical, okay? You look for highest time frame down, and then you do not use the lower time frame if a higher time frame overlaps it. So what does that mean? You might be looking at this daily order block, for example. I'm not going to use this daily order block because a higher time frame level overlaps that candle, right? Or it overlaps the order block level, so I'm not going to use it. Hopefully that makes sense. It should make sense. It's not too complicated. Okay, cool. The only exception to that is new gaps on the week or daily gaps. Gaps in terms of like market close, market open. Sorry, I have the hiccups for some reason. Anyways, we have the close of this week, which ends up here, and we have the opening price of this week. So we can use this even though the higher time frame overlaps, because it's a market open gap, a market close and market open gap. We could utilize this even in the presence of a higher time frame level. So let's put this here. Make sure I got a good color for this. I'm gonna make it like 50% is good. And then with these types of gaps, you also want to utilize the what's it called, the levels inside of it. One little tip here, make sure when you come here you do not have this ticked, okay? Because if you have this ticked, sometimes it's gonna be completely different. This is gonna show us an up candle, and then you're gonna mark it from the top. So make sure in your settings in TradingView this is unticked at all times. Funny enough, I had that issue for a while, a long while back. So the next level that we could use here is a little bit, there's actually three things that we could use on the weekly, and this one's a little bit awkward. But if we take this candle by candle, okay, at the very first here, we had a overlap level that we closed above here. We closed above the overlap level. Price pushed down here, okay, and price has not closed back below it. Do you see that? It opened way below it, but price has yet to close back beneath this. So this was an overlap level. It got turned inversion. It's still inversion. So this is still here trying to hold us up. So we can still use this level. It's a little bit messy. I'm not going to lie. Like I said, the high time frame right now, I would not be surprised if people are getting some of these things mixed up or not having totally accurate levels. That's okay. It's a little bit messy right now. That's okay. It'll get clean again soon. I promise. I don't promise. I actually have no idea. Right? I can't tell. I'm not a fucking magician. I don't know what the market's going to do. We can also use this volume imbalance here as inversion. Okay. Again, everything can turn inversion. So notice no higher time frame level overlaps this volume imbalance. So what can we do? We could use this volume imbalance, right? And we closed underneath it, so we could utilize it as inversion. Drop down to a daily chart. Okay. Pretend that this candle isn't here because we did not, we did have this gap. My bad. The market hasn't closed it open again. We had our new daily gap here. Remember, daily gaps are the exception when it comes to utilizing things regardless of if there's a high time frame level overlapping. So we can indeed utilize this daily gap. I'm going to go ahead and push this to the back, however, and we can get the levels inside of that as well. Again, a little bit messy, a little bit crammed. That's all right. Things happen. What else on the daily can we use here? Well, ask yourself a question. Can you use this fair value gap? Yes or no? Absolutely not, because the higher time frame level overlaps it. I know it's just by a little bit, but this is how you would mark this daily fair value gap. Can you use this daily fair value gap? Or this is how you would mark this daily fair value gap. Can you use it? No, because you have a higher time frame level overlapping the daily fair value gap. So you cannot use this. Similarly, can you use this inversion fair value gap here? You can use this inversion fair value gap here. This would be totally fine to use. Same with, what's it called? This volume imbalance turned inversion here. But the closer one to price and the one that I was looking at today was the lower inversion fair value gap. And the reason is because that's simply the closer one to current price action. So I was looking at this particular level today as well. And we have a sufficient amount of levels on a high time frame, so I'm not going to go ahead and drop down or even really consider lower time frame at all. So again, I want to be very clear. Today was not a day to trade. Okay? You were not technically, based on the rules, you're not supposed to be trading today because there was red folder later in the day. However, again, I promised a video, and I think there was a valid setup and something to talk about at least that could give, some benefit to somebody. So, first of all, there was red folder at 6 a.m. So even if you were trading this morning, you should not have traded until after 6. After 6 a.m. opened, we basically just pushed up into the range. And this is partially what I want to talk about and why I want to talk about today. Okay? And then I also just want to make it clear that from 5:30 down here, okay, 5:30 here, the market has gone more or less straight up, okay? So just keep that in the back of your head. The market went into this very range-bound piece of price right here in the middle, okay? And you could argue, well, you could utilize a PDR here, and you're very right. If you mark your levels correct, you could go from 682.50 to 21,600, right? You could go 682.50 to 21,600, which is right here, I believe. Is that the right price? That's the absolute right price. And here's where the kind of teaching stuff starts, okay? So you have price coming up and over the PDR, and notice how it keeps going back and forth. It is respecting PDR in the sense that throughout this whole range, it's holding the bottom part, it's holding the high part, the middle part's not really, it's not really holding that well, whatever. Regardless of what you think, the market is clearly range bound, and I think the moment that you can see that well is the second this happens here. So you have this little swing in price, and I'm telling you this because the market's been range bound for a while, and I want to help you guys trade in range bound markets without losing your fucking mind, okay? Because that's important. It's important for you not to fucking give the ghost and blow up your shit in a range bound market. So because it might just stay range bound for a while. I'm gonna be honest. It sucks to fucking say, but it might be range bound for a little bit. I don't know. With shit going on in the world, who knows? But you can still trade in this condition. You need to be fucking patient, and you cannot get chopped up in range bound shit because that's fucking stupid. So here we go. We had this little swing in price. We broke the bottom. We could not expand through the bottom. We broke the top. We fell back down into the range. Guess what? You are now certified range bound. And it's very hard for you to get out. You see how that happens? You try to break the bottom, you try to break the top, and that becomes your range of price where you cannot escape out of. And then you try to push, but you do not reach the high time frame level. Is there any trades at all to take in here? Absolutely fucking not. And if anybody took a trade in here, you're wrong. You're dead wrong for it. It's a horrible position to take because, listen, there's no high time frame levels here. You need to have a high time frame level to participate. I don't care if you forego a liquidity sweep, internal confirmation, whatever you want to do, time of day, you need to have a high time frame level to participate. If there's no high time frame levels, do not pull the fucking trigger. If anything, after 6 a.m. Here, right, if I saw somebody take this off of 603, which is ATT, here, a retest here off of a continuation play off the monthly level, right there, which, keep in mind, is the highest time frame level in this bunching of levels. This is 6 a.m. This is when red folder hit. Continuation off of 603 ATT. Play that to 11 ATT up here. Trail out at 11. If you caught that move, I'm happy for you. I think that's a valid continuation play. Yes, you don't really have a liquidity sweep. You don't really, you have internal confirmation. You can be biased the right way, right? Because you are just stepping up through every high time frame level. The only thing you really don't have here is a liquidity sweep. If I saw somebody take a retest of this 80.50 off of ATT3, I would be happy with that. I would say, listen, you took a good trade. There wasn't a liquidity sweep. Would have I taken that trade? Maybe, if I was trading on a live account today, which I wasn't because there was red folder later in the day. That's also important here. You can avoid days like this by not trading before red folder. Okay, it's not, look, volatility and range-bound markets are not the reason I don't trade before red folder, but it just so happens that if you decide not to trade before red folder, you can avoid choppy days like this. But if you really want to trade, okay, because I get a lot of people telling me, well, I'm going to trade anyway. Red folder's so late in the fucking day. I'm going to trade anyway. Will, I'm just going to do it. I know you don't do it. I'm going to do it anyway. Okay, you want to fucking do it? I'm going to show you how to do it. But it's going to involve you sitting on your fucking hands and doing absolutely fucking nothing for a long ass time until things set up perfectly. So boom, you're outside of the area where high time frame levels reside. And now you're certified in a range-bound market. You break the bottom, you break the top, boom, boom, boom. It's in a range, you can't get out. Cool. You try to expand for the high time frame level, you don't get there. What do? Is there a setup to take? Are you trying to short this? But Will, there's a liquidity sweep and you broke the low and you turned the thing inversion and blah, 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 blah. Okay, you don't have a high time frame level. That is the non-negotiable, okay? Get rid of the liquidity sweep. Get rid of whatever the fuck you want. Do not get rid of the high time frame level. It's very important. So what do you do in a range like this? How are you supposed to make money in a range like this where it's just range bound and it's not going anywhere and it's not going where and no high time frame levels are hitting and nothing's happening and all of this and yada, yada, yada? Sit on your hands, brother. Sit on your fucking hands. And notice, price runs up to a high time frame level here. So basically what I'm telling you to do is once you leave the high time frame level, if you did not participate in this run, you're sitting on your hands. And many times in a range bound market like this, there's a very classic setup that shows up. So let me tell you a story. I joined the public voice call, not the live trading call, the public Discord voice call in the Discord, the trading room call. By the way, if you ever see me in there, I'm gonna leave if 30 people join. I'm sorry, I'm not talking to 30 people. But if 5 or 6 people are in there and you're in there and you want to talk to a bunch of people, I might join in. You could ask me questions, whatever. I'm here a lot. I do watch the charts a lot. I don't just go ghost after my trading session, right? And if I'm not trading, I'm still watching the charts. So I joined around here and I recognize that, hey, we're outside of high time frame levels. Many people would look at this and say, oh, well, it's close enough to the high time frame level. This is probably going to short down and sell off. Get the fuck out of here. There's no high time frame level, okay? And even if it did, it doesn't matter. Your trade setup didn't fucking happen because there's no high time frame level, okay? You need to have a high time frame level, motherfucker. So, by the way, I don't know what's going on with me, but I feel like I'm getting more aggressive in these educational videos as time goes on. I don't know if it's just like fucking all these repetitive questions people keep asking me, stupid fucking things people keep asking me. I don't know, but I feel like I'm definitely getting more aggressive as time goes on. But hopefully, maybe it gets fucking gets it across to people's head a little bit easier when I borderline yell at them. So who knows, bro? So, boom, you're sitting on your hands. I joined here. A classic setup tends to happen when you are in a range-bound market. Notice very clearly equal lows are being generated throughout the whole thing, right? And the highs are here, a high time frame levels here. What does it start to look like generally? Well, what's like the default setup? You sweep liquidity, you boom, 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 you go to the other side, right? This is like the default setup. You take a trade in here, high time frame level, you take it off at the lows, right? That's what this starts to look like, and that's what mini range bound markets start to look like. Now, there is more to this setup, and there's more I want to talk about, so stick around, because there is going to be some, I guess, more like in-depth reading price action shit here. And we're going to talk about how you could actually play something like this. So, boom. Price starts to break out of the range here, and we're going to replay mode from this moment on. At this very moment, internally, ask yourself, what do you need to do in order to break up out of the range? Well, this wick here has been holding price down. Now, let me ask you a question that you might be wondering right now. Why would you use this wick instead of the fair value gap directly to the left of it, right here, this fair value gap here? And would you use this one? No, because again, the volume imbalance, the wick, so you would use this one. Why would you use this wick instead of this volume imbalance? Because this fair value gap already has a wick, which is here, that went through the whole thing. So now, instead of using that fair value gap, my eyes immediately go towards what was actually holding price down here. Well, theoretically, we would use this wick, but there's an older wick that contains more price action right here. So we would use this wick. Once this wick gets closed over, price is liable to head to the top. Notice how I'm not talking about ATT. I don't give a fuck about ATT if there's no high time frame levels, bro. If there's no high time frame levels, I'm not using ATT as a high time frame level. ATT is not a high time frame level, okay? If ATT prints a low, that's not a high time frame level. ATT is to be used in conjunction with high time frame levels. If you want to trade like me, if you want to have any sort of performance close to me, if you look at what I do and you say, oh, I want to trade like that guy, don't make up your own fucking rules, bro. I made this way of trading. This is my trading system. It works very consistently for me because I have rules. I have specific things that I look for. If you want similar results, you should look for the same thing, okay? I made ATT. I made PDR. I know how to use these things. ATT is not a high time frame level. And if you use it as one and you get varying results, do not fucking ask me questions about it, bro, because you're not using it how it was intended to be used. So, here we go. So we'll start looking at ATT when we trade into the high time frame level. So boom, price closes over this yellow box. Great. And at this point, give me a second. At this point, we have 29 ATT printing a high. So this is a little bit important. 29 printed a high, but we don't know if it's a high yet. So this is where 29 ATT was supposed to be. 29 could have printed a high, or it could have printed a low at this point, okay? So what do we have to do in this particular case? Well, we wait for one side to get broken, and that's going to tell us where ATT goes. And why can't we short this already? Because we have no sort of internal confirmation yet, right? And when you have a market condition like this that's very choppy, I want you to wait for the entire 4-pillar setup. I don't want you to play around in some bullshit that's like not like half of anything. I want you to refuse to get chopped up by a shit market condition. I want you to sit back and say, I'm going to look for a full setup. If I don't get one, I'm not going to fucking do anything. And if you do anything and you take a bunch of losses, do not fucking complain to me and don't tell me the shit isn't working because you're misusing it. That's not my fucking problem, motherfuckers. So listen, at this point, we have a liquidity sweep. We have a high time frame level. We could have a bias. I want you to understand that 730 is coming soon as well. Now, 730 actually just happened. So the market's been going up since 530, very one-sided. It started rounding out at around 630 to 730. It did trade into a high time frame level as well. So all things point to a good 730 setup. Not a great 730 setup. Why? Because for me, I do not play 730 on my real account, and I would not advise you. You can play 730 in a non-absolutely perfect setup. I typically don't. When there's red folder in the morning, I typically don't play 730. If you really want to, if you want to go against my exact rule set, which you can, okay? If you really want to, this is how you would do it, though. Okay, so this is a fine 730 setup. It was one-sided. It's rounding out. There's a high time frame level. The only thing wrong with it is that there's red folder later in the day, and then there was red folder earlier in the morning. So everything points at this point. I think the only logical thing that you could think is that these lows are going to get ran, okay, which are right here. And the reason for this is because, again, 730 is dictating a move lower. You ran into the high time frame level. This range bound typically sets up just the setup where it goes one side to one side. This is typically what comes out of a range bound market, especially after such an extended move. So we could assume that this will roll over. But why can't we take a short immediately? Because not everything is working yet, right? This is the first thing lower. This is the thing that was holding the move down. So if we slip this and lose it, go ahead. You could try to short to this low, but we can't do that yet. So we do have a liquidity sweep in the form of this. And this goes into another question about how do you know if it's going to sweep again? Watch. Okay, so it pushes, boom, breaks the high first. That means ATT created a low here. Okay, that means ATT created a low, and now we're pushing into a new high. And this also keeps you out of a short position because ATT has the potential to be a low at this point, and you can't break through the first thing that should hold us up. This is the first thing that should hold us up in this range. It can't even break through that. So that means it's probably going to go sweep again. That does not mean the short idea is completely fucked yet. Okay. I'll tell you how it gets fucked. It gets fucked if now we come down and we can't get outside of this daily. If this occurs, cut off all short ideas, try to get involved in a long because this thing's going to go up to the midpoint of this daily gap. Do you understand me? Hopefully you do. Okay. But that's not what happens. Price falls under. Notice that this wick here can't push any higher than the previous highs. That's quite the bearish sign, right? Because it means that this is more likely to be an actual liquidity sweep here. Right here. This is more likely to be an actual liquidity sweep. Why is it more likely to be an actual liquidity sweep? Because the motherfucker can't go back up there. So if it can't go back up there, the only reason the market would be trying to go up there anyways is because it's a liquidity sweep. So if it can't get up there, that means in this candle, notice it tries to push, right? That's what this motherfucker is rejecting. If it can't get back up, that means this is probably more likely to be a liquidity sweep. So you could say now that liquidity was taken and you lost the high time frame level again. So somebody in one of the chats mentioned, can you short off that high? In this particular case, I would say no. And the reason is because you did not trade into a real solid high time frame level. You do have a high time frame level. The whole gap is a high time frame level. But I would say you could short off this high or short interior up there if you would have actually traded into a level like this instead of trading into a gap. You're kind of just floating into the gap, then floating out of the gap, which is still fine, but it is a different thing, and you should treat it at least a little bit differently. Do you understand? So we have this. Now, what do we know from reading price action? Well, first and foremost, we want to see a fair value gap left open. So right here, we have the first fair value gap that just got formed here. In theory, or not in theory, but generally you want to see this remain open. I'm going to leave it blue as we want to see it open. Why? Because if we're expecting a aggressive run down, which is what 730 should provide, which is what this whole setup should provide, right? We ran highs here, we ran highs here, we swept liquidity, we lost the level, we have the lows, we have 730. This should be left open to indicate aggression. Oftentimes on the most aggressive moves, fair value gaps get left open at the bottom of the range. You notice it here as well. This fair value gap gets left open before the actual run. The second fair value gap that gets created is generally the one that holds price up if it's going to be aggressive. And if you trade down into that first one, for example, like look at it here, price tries to expand up, it does not leave the first fair value gap open, and look, it goes range bound for a while. It does not tend to lead to high levels of aggression, if that makes sense. So boom, we create another one here. This is a second fair value gap. So we can permit price to trade into this right here. We can permit price to trade into this. And at this point as well, obviously we would still love to see this get failed, but also what we would want to see is we would want to see this wick get closed under. Why am I using this wick? Because there's no fair value gaps on the way up. And this is the big wick that was holding price up right here. If this could end up getting closed under, a retest of that could be potential. Okay. So turn this black. Turn this black. Visual order, bring to front. Boom. Okay. So this is what we got here. Let me make these purple. Sorry, I'm just particular about stuff. That's not the fucking... That's funny. I said I'm particular and fucked it up. So here, as price goes into this fair value gap, this is permissible to short. You can short here, but you have to have the proper stop loss. So you do have the whole setup at this point. You have the time window. You have a reason to be bearish. You have a liquidity sweep. You have a high time frame level. You have internal confirmation with ATT. This was 41. So you have internal confirmation with ATT here. ATT of 41. Actually creating the high. And you have the high time frame level. So this is interesting here. So if this fair value gap was not created like so, or if it was not left open, I would expect a return to the high time frame level. I would expect this move to push back up to the high time frame level. Because this fair value gap got left open, I want to see it be left open until at least you break this low. So why am I pinpointing at least this low? Take your bets, guys. Well, because this is the range that you swept, okay? This is the range that you swept right here. You swept this range of price right here. So you come back to here. This goes back to like early days, like basic chart reading things. You sweep this liquidity. This is the opposing liquidity that you should be going after. So if this is showcasing aggression, what is it showing aggression towards? What is the purpose of the aggression that it's showing? Well, what did price just do? Where is price trying to go? Price is trying to go for this low at least. All right. So if price is trying to go for that low and you left this fair value gap open, you don't need that retest of the high time frame level. So you can take it inside this fair value gap if you wanted. Right on this fair value gap, midpoint, whatever. If you took a short here, your stop loss at the minimum needs to be right above this candle's wick. Okay. And if you put your stop loss above this candle's wick, you're opening yourself up to some levels of a higher risk in the sense that you could trade right up into the high time frame level and sell off. And then you're stopped out and price goes on without you. That could very well happen. However, by putting your stop loss here, you're saying, I believe that this needs to be left open in order to get extremely aggressive into these lows. And if it's not left open, I don't want to be in the trade. Alternatively, you could put your stop loss here, but you're sacrificing quite a bit of risk reward. I think, you know, if you were to take it here with the stop loss here, this is a fucking huge stop loss. This is not the trade that I would take on a real live account, but, you know, it still provides room for 3R, which, you know, for a lot of people, that's totally fine. And honestly, this type of shit is where you should probably start. Because to be honest, at this point, like, who the fuck cares if it trades back into that motherfucker or if it doesn't? Especially if you're new, especially if you're not making any money trading. Don't try to optimize yourself, okay? You take 3R, it's good. It's a good fucking trade, man. So, you know, focus on getting profitable sometime. You'll see how I could optimize the stop loss for this in a minute. But yeah, initially putting a stop loss here is not a bad idea either. I think if I took the fair value gap, which I probably wouldn't with my real account, because I think that stop loss is still a little bit too big for me, I would have put my stop loss above this 43 candle. Right. And then it should be noted, this is ATT as well. 47 prints ATT here. So it's also trading up into this first fair value gap with an ATT print. And now we're very confident that the 640.50 is going to go, especially because we just closed this wick. So what's next? How do you get an entry now? Well, very simple. You can take the retest of the levels inside of this wick. Okay. You could take the retest of the levels inside of this wick. Pushes up right there. You could get short at 666.25. If you get short at 666.25, this is, by the way, the trade that I would take if I was trading with a real account. I would take the 666.25 and I would put my stop loss one tick above the high of this wick. So that would give me the most optimal risk reward. That would be able to give me from here one tick above this motherfucker. That would mean even just to these lows that we're convinced that could give you 9.3R, which is a very good day. And if you're lucky enough to get a crazy expansion, you know, it's like 18, 19R. If you want a bit of a safer stop loss, just put it above the ATT high, because that ATT high is very likely to stay intact. It's a little bit less likely. Like it is very feasible for price to just fill in this wick. You get stopped out and then it dumps, and that could happen. And that happens to me. Like when a wick trade like this fails, that's how it fails, and sometimes it's annoying. So if you want to avoid that, put your stop loss above the ATT high. Cool. Hopefully that makes sense. So this video is longer than I expected. It's already been 30 minutes. Hopefully you guys are getting something out of this, because I'm really trying to slow down the amount of Patreon videos that I make, but I'm trying to make each one more quality. And the reason is because I don't want a lot of filler. So price trades down to the lows. And this is where I'll take you to trading. And I'll undo this to show you that in that live call, although I was not trading with a real account today, and we'll zoom out the whole day, I didn't take anything all day. I was watching price action all day. In that call, in the public, I'm doing the things that I just said, right? The first trade that I took was on the fair value gap, okay? And then I wanted to demonstrate, on a real account, I wouldn't take this because the stop loss would have to be too big. But I was trying to demonstrate what you could do to the people in that call, and demonstrate the type of entries that you could have taken. And I didn't want to do that just by talking about it, because talk is fucking cheap and people want to know that you're actually doing what you're saying. And the second type of way that you could have done this is getting in right here. So I entered 664, which is just the actual retest into the wick. If I was on a real account, I would have put the limit order at 666. But the first entry, middle of the entry to the fair value gap, stop loss there. Second entry, boom, right here. And I just took it all the way down to the high time frame level, way down here. Again, on a real account, I'm almost always trailing out pretty aggressive, so I'm probably going to trail out on this run here. And that's the next thing that we're going to talk about right now. But I just wanted to show you these executions to show you that what I'm talking about isn't just bullshit. I didn't take any other trades the whole day. This is real. I can't I'll turn it on and off. It's not a fucking executions, boom, 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 boom. I live trade every single fucking day, but still some people seem to think that I can't do what I'm talking about. You're fucking stupid, bro. I make $3 million a month off this shit. So please don't disrespect me. No ego. Probably a little bit of ego. To be honest, some of these people who talk shit probably deserve to get ego, to be honest. Honestly, I'm way too good at this to not have an ego, to be fucking honest. So maybe I should have an ego. Maybe I should start having a fucking ego, bro, because some people kind of piss me off sometimes, bro. What was I on? What was I saying? So I wanted to talk about gauging aggression. So if you were actually in this trade and you trail out down here, that's totally fine because you avoid bullshit. And I also wanted to talk about this bullshit range because this bullshit range is important. This is a no-go zone for trades. Why is it a no-go zone? I'm going to let you in on something pretty important here. This is a no-go zone for one reason. Because the aggressive move has already happened. So let's take off a lot of this bullshit from the chart here to just speak on some shit here. The aggressive move has already happened. So in a move, this is what happens. And I'm going to draw this here. You have some sort of move like this. Boom. Boom. And you go. So at this point, let's imagine that this was choppy. Okay. If this was choppy, the aggressive part of the move happened here. This was the aggressive part. We could label this AG. Okay, we could label this aggressive, and this was the choppy. Label this C. Once you break this low, right, from above this high and below this low, like this section of price action right here is the aggressive part. So you could expect the same aggression on the way down inside of this range. Once you break this low, even if your target is much lower, you can expect it to go choppy for a while because previously price action was choppy at that point. I don't know if that diagram did anything for anybody, but we're going to go to the real chart right now and talk about it. So as you can see, this was the aggressive part of the move, right? This was the expansion to the high. That's why you get similar aggression going down. Notice how you push up, you stall a little bit right here, you go. You push down, you stall a little bit right here, you go, right? Because there's only one place you stalled in this range. The second you break that low, you're back in that initial choppy range, which is what I'm trying to get at, right? You're back at that initial choppy range right here, which goes from here to here, okay? You're back at that initial choppy range. So once you break that low and you're done with the aggressive part of the down move, you could expect this chop again, which is why I'm always happy to trail out right here, because I don't want to sit in this bullshit. And it also means that if you're looking for re-entries, you should not look for entries in this bullshit. Don't tolerate this shit, especially on a choppy bad day. Okay. If there was chop in the past, there's probably going to be chop in the future. History repeats itself. So this is a no-go zone for me for trades. No trading. Okay. Unless the only times this is a yes zone for trading is if it looks something like this, where the choppy zone was down here, for example. It goes down. It's a little bit. It goes. And then it's boom, 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 boom. Here, you could take a trade here because it's not a ton of chop. But I don't want you to be taking a trade inside of this section, because this is due to fuck you over, because previously it was also choppy, especially in extremely choppy conditions, which we're trading in right now. So if the market becomes very dynamic, very fast moving, this piece of advice that I told you can be adapted to those situations. So this is a no-go zone. Hopefully the whole thing that I just talked about makes sense for people. And then you target these lows. Right underneath these lows, you have the high time frame level. And then from there, price goes on. But I wanted to really do a deep dive of this idea, talk about more price reading things, talk about more how to trade and chop, etc. This has been a 37-minute video at this point, and I'm starting to forget how to think. So hopefully this helps somebody. Yeah, I just want to reiterate again, I would not trade today with a live account because there was red folder later. So yeah, hopefully this helped. All right. Today I wanted to go over kind of a unique video here, because yesterday's live trading, my microphone broke. And what that led to is me using text to kind of convey my thoughts. And as you can see, there's a lot of text here, okay? And I think this is a unique opportunity to kind of review this on Patreon, because this text represents my real-time thoughts as it was happening. And honestly, a lot of my real-time thoughts as it was happening, entries that I was considering, why I was considering direction to be a particular way, etc. So I think that this video could end up being very valuable, and it's unique in the sense that this is the one time I've ever done something like this, because as you can see, my mic is fucked on this particular day. So, but yeah, this gives a very unique and kind of cool opportunity to make a Patreon video where I go through and talk about this text and talk about this particular day of price action with the added benefit of my real-time thoughts as it was happening. So, first and foremost here, I'm actually going to hide most of the text for a moment, just so that we could go over the levels that I was looking at on this particular day, so that everybody's up to speed. And then we'll get into the actual real thought process, which is, I think, is going to be very, very valuable in this video. To be honest, this might take a minute to hide everything, so I'm going to pause the recording and I'll be back when I've hidden it all. Alrighty, all the text is hidden, so let's go to a high time frame and talk about the high time frame levels that I was looking at. Here we go. Let me get rid of this at least. So on a and it's going to be a little bit messy, but just follow me. On a high time frame, obviously I'm still watching this wick. Reason being is that we closed over it in this candle, and so far all this month has done is came down to the midpoint of that. Okay, we could agree. I know the chart's a little bit messy, there's a lot of levels, but just follow me. I'm using levels inside of this wick because we closed over it, so these levels can stand to potentially hold us up. The levels inside of this monthly wick here as well I'm using. So far this month, we've traded up into 159 and sold off, at least just on a monthly viewpoint of things. And then here we go. Let's drop down to a weekly. What I'm looking at on a weekly chart is fairly simple. This is the new weekly gap right here. And then I'm also, on this particular day, I was watching the overlap level. So this is supposed to be a bullish overlap, which we haven't closed underneath yet. So we can't take it off the chart yet. But in reality, as you know, well, I don't know how new or old you've been to this way of trading, but we kind of treat levels like if we're below them, they're bearish. If we're above them, they're bullish. There's no real particular way to look at it like that. So Although it's supposed to be like a bullish overlap level. If we're beneath it, it could hold us in a bearish way. If we're above it, it could hold us in a bullish way on a lower time frame. Then we drop down to a daily chart here, and we start to look at this particular fair value gap. The reason that we could use this is because no high time frame level, no higher time frame level overlaps this. So this is usable on this particular day. It absolutely is usable. And then I also had this daily here. And then the rest of the levels are PDR levels. So the rest of the levels that I was looking at were just simply PDR levels. So you had basically just PDR levels between the monthlies over and over again between the monthlies. This is from 57, which is right here, to 03. So it's just PDR levels between the monthlies. And then there was one more monthly level that I forgot to talk about, which was the mean threshold of the ungained order block here on the monthly. And this is the low of it. I also have that PDR level as well denoted down here. So it's a lot of levels, but, you know, hang with me for a minute. So now I'm going to unhide the text, and we're going to go through what my thought process was for this entire day, how I played it, and yeah, with my real-time thoughts in the form of text, which is where the uniqueness and possibly the usefulness of this video comes from. So let me go ahead and unhide all this text. Okay, so let's start from the beginning. The market opened right here. So the market opened inside of this candle, and before the market opened, we had this monthly level, which was the mean threshold of the ungained monthly order block. And basically, for the most part, I was just looking at price action. If we're below this, I'm bearish. And if we're below this, I'm pretty fucking bearish, because this, in theory, sets into motion like a PDR. So the reason why this says fucking scuffed session is because my mic was fucked, so it was a scuffed ass session. But it turned out to be actually a pretty good session. So as long as we're below this level, I'm bearish, which is exactly what I said here. And this is real time. If you don't think this is real time, you could ask anybody in live trading. I have no reason to lie to you. They all watch it. Like 35 people were in the call. Funny enough, more people were sustained in that call than normally when I'm talking. So I don't know what that's supposed to mean. But yeah. So generally what I look at is I also look for some sort of particular wick that I can look to utilize to potentially get involved with. So in this particular day, I believe what I was looking at, because I took a trade somewhere in here, if I'm correct. I think it was off of this wick right here, which was kind of holding up the move. There was nothing really older to use in wick wise. As something internal to break you down aggressively. You had this, which already got closed underneath. These were already pretty high up in the move, so this was kind of the only thing we had. And I believe the trade that I took was once this closed underneath this wick, I just took it right off the rip on this high time frame level with the stop loss above. It tried to dump, it ended up breaking me even and moving down. Which is why I said annoying to get break even on that move. The move was low-key free to short. The reason I thought it was low-key free to short was because you had this monthly level right here and you're just holding below it. So I think that sets into motion kind of this PDR move to just sink you down pretty aggressively. And this is a type of trade that I'll take a lot, whereas like it's focused on the high time frame things, but if you hold this motherfucker, this fucking interior wick, like it's probably just going to die. And you could argue to use this one or whatever. To be honest, you could in theory use this one instead because it does hold up more price action. This one's just a little bit bigger, so and it overlaps the same wick anyway. So I'd rather use the bigger one just to get involved faster. And then I thought that so this was later in the day. We started to break down. We fell down into the first equal lows on the 15-minute chart, but we just had this monthly. So we fell down into the monthly. Price came down. I was saying if it holds above 257, so if it was able to get it back above 257 here and hold, which would be regaining the monthly, I might want to be re-involved to see if I could push this up. And when we were trading here, the text is kind of all over the place, but when we were trading here, I said lower still because we just weren't at the high time frame level yet. If we slip this monthly, we're probably really dead. The reason we're probably really dead is there's just a big range lower into the next monthly that makes sense. Because you got to realize, like, forget the text for a second. If we're rejecting off this, PDR dictates that we'll reach all the way down into 2103.75. So if we really slip this 257, this thing's just gonna fucking crush in a really big way. So again, these are the old lows that we swept on a 15-minute chart. We came back up into it. I said this is moment of truth because again, if we were able to get above these old lows that we swept, that would mean that this is more likely to be a liquidity sweep, especially if we weren't able to get back underneath the 286. That's as simple as, you know, you have shit like this sometimes. You get a sweep of liquidity like so. If price can't get back above those lows, it's just going to die. If price can get back above those lows and it can't go back down into this lower range, that's kind of confirming this as a liquidity sweep. Does that make sense? Hopefully it makes sense. So that's what I was saying, just on a bigger time frame here, because we have, again, we have these lows that we just swept, and technically at this point we also traded down into the high time frame level. But if we can't push above these lows that we got into, then that liquidity sweep's invalid, right? So that's why I dictated this as moment of truth in the moment. I said if we slip, it's just gonna fucking crush. Right. But if we were able to get above 286, like I said here, above 286, it's probably going to run. But it's struggling to find footing, just going to keep dying because it never got above 286. It never got enough above 286. It's probably just going to die. And then it pushes down. And then you start to notice, I said, this probably goes to 2103. The reason I was looking at 2103 is, again, because the PDR got set into motion. From 257 down to here is the PDR. That's where it's probably going. That's what I wanted. In this daily fair value gap, because that PDR was a higher time frame and overall I'm bearish, and ATT started, right? ATT started at 6. It printed a high. It printed a high. This was 16. I wanted to see you step lower through this. More or less waiting to start. This is where I wrote this. More or less waiting to start stepping down through this daily motherfucker or close over that ATT3 wick. So at this point, I wrote that text when you were trading above here. And I was basically looking for, well, this daily can hold, but I want to get a little bit of confirmation because I don't want to go counter bias. If you close above this wick, maybe I would be interested in trying some sort of interior retest to get it back up into the monthly. But more realistically, what's probably going to happen is you're probably going to get stepping through this daily fair value gap in an attempt to turn it inversion. So I thought that's where the next potential opportunity would come in the form of a continuation play, right? And then we got this where right here, you fell through the daily, you traded up into 163, ATT printed 16, playing ATT 17 playing off of 16. I really wanted the retest of this fucking 156 on this candle. I would have shorted the fuck out of that into 44 and probably lower. But I didn't get it, and that was a little bit unfortunate. You could see I was a little bit annoyed. Not getting that wick is so lame. I think it's probably one of the best potential trades today so far. I'd have taken that wick if it gave. Not even a wick retest, criminal. So I was a little bit upset. Or not upset, but it's sometimes when you have such a perfect idea that you think is perfect, where like you have a bigger PDR emotion, you're already shown to be stepping through the high time frame level, you have ATT on your side, everything is good for a solid continuation play, and it just doesn't give an entry. Yeah, it's a little bit annoying. But regardless, I thought that it was still going to drop down. So we fell down into 44 and we created this low. On this candle, I said that this could be potentially low of the day. Where did I write that? Where is it? If this becomes low a day, that's crazy to call the minute informed off no level. So the reason why I thought that this could be potentially low day is because a lot of times what you see, and obviously as you can see later, it wasn't low day. And I mentioned that. I said 130 now, probably over here, because I understood that once you rejected off of this daily, it was just going to slam down underneath this low. The reason why I thought that this was going to create a real low here is because a lot of times what happens if you miss a high time frame level like this, especially if you do it off a PDR level like this, is that this is just going to generate liquidity for this O3 level. So I wasn't looking at this to be low a day forever, but more so like a low that gets created to generate liquidity above 23,075 so that price later could have liquidity to take so that it can move higher later, because at this point I was already anticipating that 730 could play, which is where I made a lot of money today on 730. So by this moment at 620, I was already thinking about 730 and understanding that this could be a low that gets swept around 730. We're already leaving equal highs on top, and if 730 is going to play, yeah, it's probably going to run into 03, but that means you want to create a low here in order to generate liquidity in this range for that 730 sweep in order to move up. So I'm already thinking ahead, a couple steps ahead. It's a little bit of a hard thought process, but whatever. And I said, part of me wants to fade, probably insanity. I said this right here at 623. When I say fade, I mean move up, because of that. And I said probably insanity because look at the market. It's just sinking, right? But hopefully that it makes sense why I kind of want this low to be pushed. I said how the fuck I'm not involved. That was on this dump, so I wasn't able to capitalize on this dump much at all. Actually, at all. Right. So here we go. Price fell down into the PDR level. Here, I thought that this could lead to a run at least into 130.25. Okay, so after ATT printed and we pushed and we pushed, I said 130.25 probably now, because that's exactly what I wanted price to get into, was 130.25. So where was it? And you had the mean threshold of this order block right here. So I did try this a bit, right? I did try this a little bit in the way of I believe I tried this first mean threshold push and I actually got stopped out on that. But it closed back above it and we were still holding over the PDR, so it's not like the trade's bad, right? I still think it's totally fine. I was watching this wick at this point and notice how we closed above and this candle tested into the halfway point of that wick and we leave the volume imbalance. So we're coming off a high time frame level. We have an interior liquidity sweep. I have a reason to be bullish based off PDR. ATT is starting to print lows. This volume imbalance right here, I decided to take with a stop loss here. I was okay with putting a stop loss here because you would already traded down into the midpoint of that wick, and I ended up trailing out. It was honestly a little bit of a shame trail out. I think it was like fucking 3R exactly. So at this point in the day, I was up about 2R. Okay, and price pushed down, price pushed down, price pushed down. I wanted to be involved in the secondary run up long because price just wasn't breaking this fair value gap, and I really thought that holding off this 144 here and this wick, this 144 would lead you up into at least 130.25, which is what I said right here. And I wanted this to push higher. Right here, I said not reaching a sus. So when price action missed run into 130.25, I said it's sus and it probably still goes up, with the understanding that this is probably just generating liquidity. At this moment is when I started to think that this low was probably going to get compromised, because if we're generating a liquidity above these highs and we can't push through 130 or the daily, it's probably going to push all the way back down and die into those lows. And again, I'm already starting to think about potentially 730 happening, so that's kind of in the forefront of my mind. So price runs up, it runs up like so. This starts to push down. Funny enough, in this moment, because we closed above the daily, I was bullish. I had to be. So, funny enough, I did take this 139 trade here. It pushed higher. I went break even. It slammed me down break even right on the retest of 143. So I was lucky enough to get break even on that, and that's why I said this easily could have been a loss. Nice break even on that. And then the second that I got break even on that, I got bearish because ATT started to print highs. We couldn't push up through the daily. This tried to close above. It tried to hold. It failed to hold everything. So I got very, very bearish at this point, and I wanted to figure out a way to participate in a short. And kind of a recurring theme about today is you'll notice that it was kind of pretty hard for me to execute on until 7:30. But again, this is just how you talk about price action here. So I wanted an 83.5 short midpoint of this wick inside of this candle right here, or is this wick right here? Inside of this candle, I would have shorted the midpoint of this wick off on an aggressive breakdown, and I probably would have trailed out somewhere down here. But it never reached up into the midpoint of this wick, so I took that off. Or I didn't take this off. This was still left. And this is starting to get kind of interesting now because I wanted these highs that got created here, these internal highs, I wanted them to get left. So this is not after the fact thinking. These little texts that I say where I'm like, I don't know if you need these highs. I'm talking about these internal highs. Maybe not. I guess time will tell. Get left. I want them to get left. Like, I'm wanting these highs to be left in the market. Why do I want these highs to be left in the market? Because I'm anticipating 730 to play, and you need to have liquidity generated for 730. So the trade that I took inside of this range, I know there's no real high time frame level, so it's a little bit suspect, but I want these highs to be left. I took a short on 88, and I got filled 2 contracts out of 23, and that was really annoying. I was kind of pissed off. And then I just exited it out. I think I made about $1,000 on that, which is about 0.3 R for me. So really nothing. And then either way, you got retested back up to here. I could have reshorted 83.50. I could have reshorted 83.50 potentially. But at this point, I was just like, well, 730 is coming close. I might as well just wait for 730. And I already tried my attempt on this 88, so if it doesn't want to give it to me, it's not going to give it to me. This was pretty messy price action. Kind of hard to get involved in a short, especially if you're going break even like me. But understanding that it was going to short and it was going to leave those highs. Yeah, I made a band off the 2 contracts still, I guess. And then I said broke behavior, which obviously $1,000 is a lot of money. But I was annoyed. And I was like, I knew those interior highs were not going to get ran. That partial fill is diabolical. And then I was just complaining about it. I was just complaining about calling those highs not being run just to be partial filled. Super unfortunate. Because it's annoying. When you get partial filled, especially when you make a prediction like that, where it's like, yeah, these interior highs are not going to get ran. You make a prediction like that, and then you get partial filled. Like, it's not even something you can really control. Yeah, it's a little bit annoying sometimes. But, oh well, so sad. Price fell down into 730. So why did I think 730 was going to play today? And by the way, when I play 730, I have about a 90% success rate with 730. I don't even remember the last time a 730 trade failed for me. And it's because of how harshly I filter it. So I need a very one-sided morning, which we had, between the hours of 5:30 and 6:30. I need a rounding out. Between the hours of 6:30 and 7:30, and then within the minutes of 7:30 and 7:35, I need an entry opportunity to fade the morning move, and ideally, you created equal highs on the way up. That's a perfect 7:30 for me, and that's exactly what we had today, and that's where I made a lot of my money today. So we had a very one-sided morning. Between the hours of 6:30 here and 7:30, we were rounding out. And we had a high time frame level. Going into 7:30, I said, no high time frame level makes 7:30 unplayable. And then I said, this is the next thing that I said, 2103.75 by 7:35 could save it. We traded into here. 7:30 created a low. I said, is this going to be 7:30? I said, I want to see a fair value gap get created and left open. If the low gets ran here, I'm not playing 7:30. Price pushed up. When this formed, I said it was going to stay open. I want you to understand this is not hindsight at all. When this formed, I said this was going to stay open. It did stay open. It pushed higher. We regained the PDR level, that high time frame level. This was my easiest 7:30 target. This was the next target for 7:30. We closed above this wick right here. Price pushed down, retested into the high time frame level. And as price retested into this high time frame level, I took a much lower time frame. You can't even see it on a 15 second here. I took these positions here. So price traded into that high time frame level, and I get involved on 49.25 as my 7:30 play, which is actually a 5 second retest of the midpoint of the wick that we broke. So let's bring this to front, which is actually a 5 second retest of the wick that we broke. Understanding that 7:30 is probably going to play, we have the 7:30 low kind of confirmed. We have PDR involved, telling us we're probably going to get back up into 57. We have equal highs getting created on the way up. And we have an interior liquidity sweep. We have a high time frame level, which is, again, PDR telling us we're probably going to get at least into 130 again. And we have this interior wick that got closed over. So I took that trade and ended up trailing out pretty well. It kept going. It kept going. I believe I ended up trailing out like underneath this candle after 130, like trading into 130. It ultimately went up a lot higher, but this made me over 10R, and this was ultimately about a 12.5 hour day. And then I was like, yeah, this is the power of a good 7:30 setup. 90% success rate if filtered correctly. 11.6 hour day, 26 hour in the week, which is true. Yeah, that was my thought process real time. Hopefully this helped a little bit to kind of get into my mind about what I'm thinking about. Maybe I'll do this again one day. But yeah, a lot of this day, it was kind of hard to get involved in. I think the trades that I did take were really good. I think that this long here was really good. I think that this 7:30 long was really good. I think I was patient enough to stay out of the move in other parts of the day. Understanding that these highs were not going to get ran, understanding that this low was going to get put in to be a sweep for 7:30, understanding that this death was going to happen, understanding that we were going to step and ladder down through this daily, understanding that this 86 was the important part. It would have been nice if I was able to play this short without getting break even. So be it. But yeah, that's what happened on the day where my microphone was broken.